All right, guys. Good morning. Good morning. How about Google today, man? I told you guys I was scaling it in. My average is like 96 something. And Google is up. You love to see it. We'll see if it keeps up. Today we have PPI inflation data dropping, which are very relevant, which is a very relevant metric. Uh, is today Wednesday or Thursday? Today is Thursday. So we got PPI numbers and jobless claims numbers coming out today. Uh, so we got a lot of stuff coming out today that will influence markets here. Let me get this so we can listen to music. But yeah, we got a lot of stuff dropping today. Should be an interesting day. I'm going to put it back to the old school music we used to listen to. Hold on, let me see. But good morning. It is 5 o'clock in the morning here in Texas, and I am awake. So full Mac. All right. We'll hear as we always do. PPI inflation data coming higher or lower than expected. Test. Can you hear me? You can hear me, really? Test. Better? I mean, how's the sound now? Is that good? Oh, my bad, guys. The music was up all the way. That was my fault. There you go. That should be way better now. Sorry, team. Yeah, sorry, guys. My bad. But Google, man, look at Google. Hey, listen. Beautiful day yesterday. Brought us well into the green for this position. We will start scaling out of it at the opening bell. Yeah, looks good. Again, we talked about Google. We told people what we were buying, why we were buying it, and yeah, we wrote it up nicely here. We'll take probably, I would say, at least 40% off of this position at the opening bell. Maybe a little bit earlier, but we took some off. But Google's up there. SPY kind of break even, but a very green day on the SPY yesterday, which is nice to see. Apple red on the day. We also had Lyft. Like the last couple of days, we've had random people asking me, hey, how's your Lyft trade? I don't know if they're trying to like poke at me because they were insinuating that we were losing. But now in Lyft, we're up almost $1 per share. Our entry's 1090s. Lyft is at 1150 right now. So Lyft feels good, man. Hey, look, here it is. We bought this one too, and it's up as well. So hey, that's nice as well. We'll see if that continues here. But we're green on Lyft also. We're green on Lyft now. We're green on Ford now. We're green on every one of our swing trades that we bought the other day. Ford, Lyft, Google, all red, all green now. And yeah, you love to see it. And so again, the swing trading strategy, I made a post on Twitter about this yesterday. The swing trading strategy I use, it's powerful, man. It works. I can't guarantee it's always going to work. I mean, nobody can. But my swing trading's been really profitable over the last 6 months or so. And again, Lyft. We bought Lyft at 1050s. Way over here. We bought Lyft. Sitting on it now. We bought Google, and our average is like 96s. I still think we could probably get some more upside to this Google trade as well, but I'll take some off at the open. We'll see. Yeah, crypto flying up right now. If you look at Bitcoin up to almost 25K. Not quite 25K yet, but it tapped it. So Bitcoin looking great. You'll have to see it. So my wife got me a new chair. It's kind of nice, but it's kind of low. Yeah, for sure, beach 100%, man. Just feels good, It's like one thing I'm noticing is like every time I take one of these swing trades, like even the haters are going to start to notice that like I make money on these most of the time. Like after a certain point, you just can't really critique it because it's like, all right, well, he's green in it again, and it feels good to do it. But like, again, it's like for the first 3 days after I enter a swing trade, when I might be red on the swing trade, it's like we get random people like, hey, how's your losing trade? Ha ha ha. Some of them called me a clown when I did it on Disney, and all this stuff, right? And they know how my Google trade is. Like they know I was down in Google and Lyft, but as I said, it wasn't down like a ton. And so the big thing with swing trading is you got to let it work a little bit. Most of the time, you're not going to instantly be green in these positions. It's just not how it works. You're going to have to look at some red every now and then. My account's large enough to where it's relatively insignificant, but like, no, Elon doesn't own ChatGPT. Well, the data star, like I said, I understand a bearish look. I don't think any of that matters. Okay, like the thing you got to understand is that inflation was better, and CPI data was better than last time, right? It was lower than last time. We've had progressively lower CPI reports over the last 3 or 4 months, and so like you got all the bears that are saying, oh, doom and gloom, the market should be crashing. No, it's not. I've been saying this the whole time as the market's been pumping up, and I've been absolutely right about it so far. And maybe we correct. I mean, like I said, I do think we're a little extended on the upside, but the whole point is like we don't have to crash. Inflation data is getting progressively better each time. Even if we missed it by 0.2% this time, it was still lower than last time. Even with this miss, it was more than expected, but it was less than last time, regardless of that. And so it's like you got to look at the nuance of it and understand like, hey, if missing CPI by 0.2%, even though it's still lower than the previous time, it's not going to make the market crash. It shouldn't, at least like logically and sensically, it shouldn't make the market crash, right? It should. Theoretically, it should make the market drop slightly. So I don't know why we pumped up. My guess is we dropped slightly from it, and then we rebounded on other stuff, which we did have earnings yesterday. We have earnings today as well. And I think sensibly is the word I was trying to think of. I guess sensically is a word, which, I really didn't even know, but I used it. Yeah, so Elon invested $10 billion into OpenAI or something, but he doesn't own it. Right, 100% beach for sure, bro. You just need to be patient, man. That's the big thing. Like you gotta just like with stuff like this, man. You just have to understand you're probably gonna be red for a little while, but if you time it right, again, I was red in my Google trade for about 3 days. And you better believe we had some random people join and say, "Hey, how's your Google trade? Haha. How's your Lyft trade? Ha ha ha." And now it's just kind of like, well, they're very green now. You love to see it. People doubt the swing. Like I said, what I think it really is like bears for whatever reason are convinced that the market's going to burn or whatever. And so they're missing out on gains because of that mindset. And so anytime I'm like, yeah, I'm buying these stocks, they're like, I can't believe he's buying anything. Why would he buy anything? And then they get weird. And then I make money in them. And then they probably sit there and they're like, man, this dude's making money buying stuff. Maybe I should be buying stuff too. I don't know if I'm not going to tell you should be, but honestly, if Google didn't rebound back in my favor, I'd probably just let it sit there. It's Google. Lyft as well. Lyft is still widely used as a company. So even if this didn't go in my favor, how long is it going to be at $10 a share? It's at least going to get up to 15, in my opinion, eventually. So it's like I just sit on these. 8:30 Eastern Standard Time is when the data drops. But right now it is 6:20. So we got about 2 hours, 27 and a half minutes. This is about how much time we got left. Just to time it real quick. I'm convinced most bears are people who already lost all their money and don't have any skin in the game, so they choose to back people because they're mad at the world. Yeah. I just think that, I think everybody wants to be Michael Burry. Everybody watches The Big Short. Everybody wants to be Michael Burry. Everybody copies. I think a lot of I think regardless of what individual retail traders think, I think there's some big influencers pushing the market crash sentiment. And I think they've been wrong. I think it's a very kind of ego-driven game where even though they've been wrong, they don't want to admit they've been wrong. And so it's a lot easier, instead of being introspective, it's a lot easier to just kind of say, oh, manipulation, it should have crashed, which it's like, no, we shouldn't have. SPY, Google popping again. Hey, you love to see it. SPY is up at 413. So we might be a little extended on the upside, but it's certainly not due for a crash. We're down on the year, generally when crashes happen, we're not down on the year. We're pumping up, breaking highs and stuff. As well as the fact that what we're in right now, it's just not the same as 08. It's not the same as 01. 01 internet companies were breaking highs constantly and doing all this crazy stuff. Nothing is really close to their highs. Google's not, Apple's not, Amazon's not. None of them are even close to their highs. And so it's one of those things where it's like, look, people acting like a crash is just absolutely necessary. It's just not accurate, Yeah, I don't know if they invest millions. I think some of them actually believe we're going to crash. I saw some of them calling for the stock market to go to zero, which is just so unlikely. And if it does, we got bigger problems than being right on YouTube about it, but I think a lot of them are just really ego driven at this point in time. I think they want to be the next big stock market crash predictors, is what I think it is. Yeah. I don't know. I think a lot of the bears are people who also take big put options ahead of these releases, which, to be honest, are kind of gambling traders. If you're buying big put options ahead of CPI and PPI reports, then you're just kind of gambling on that report. All right, so today we've got Hasbro, Datadog, Crocs, Paramount. Nothing really big for earnings. This evening we got DraftKings and Applied Materials, but again, nothing really big. We don't really have any big earnings today. Looking at next week. Next week we got some stuff. We got like Walmart, Coinbase on Tuesday. Wednesday we got Baidu, Wingstop, Fiverr, Overstock, Nvidia. Wednesday. So yeah, Wednesday we've got some stuff. All right, so yeah, we're gonna be streaming earnings next Tuesday, next Wednesday, maybe next Thursday. Next Thursday is kind of SQ and Intuit, so it's like they're okay companies, but they're not huge. Probably not worth it. It looks like the big earnings are gonna start the Monday after that with or the Tuesday after that, because that's the Tuesday after that we've got Rivian that we're gonna stream. We'll stream Rivian. On Wednesday we've got. I don't know about Wednesday either. It looks like all the big ones are done. Thursday. No, I just don't see a I don't see a point in streaming all these, man. Some of these maybe. Hold on, let me see. What are some big earnings that haven't come out this earnings season yet? Am I missing some of them? Because I'm looking here all the way into March and I don't see anything yet. See SQ. Zoom. Hey, what's up, Beard? When bulls are this brave and greedy, big pullback occurs. Maybe. And again, I'll say this, like I've said it a bunch of times. Maybe y'all are right. You know, maybe we do crash, but it's not something that's certain. And again, as long as you can acknowledge that it's not certain, then we're all good. All right, so what else do we got? What are the big companies? We got Disney already. Disney already reported earnings. Netflix, Amazon. Right, let's look at the S&P 500 list. That's kind of the easiest way to do it. All right, we did Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Exxon, J&J, Meta. I think Meta's already done theirs. Yeah, we don't really have any other big companies for earnings. Disney, we did Disney already. We got like Salesforce, Netflix. We did Netflix already. Nike, Oracle. I think we've done this. So yeah, big earnings are done for earnings season. Unfortunately, right now, they don't start again for another couple months, it seems. So we got some stuff next week. We got Nvidia, and we're gonna finish off the earnings season next week, probably with Nvidia and Coinbase. What's up, Victor? Yeah, and maybe we do. Somebody says I'm a bear, but it's based on macro fundamentals right now. The technicals are definitely bullish though, but you are starting to see a divergence in the bond and US dollar. Potentially. I understand the argument for a bear move here. I really do. Like, I understand the argument. What I'm saying though is just like, it's fine to be a bear. All right. And I'm a bear in a lot of instances. Okay. But in swing trading, I'm certainly a bull because I just make money most of the time. Again, I'm in Google right now, up nicely from 96s. I'm in Lyft at 15s. It's at 11s. Or I'm in Lyft, I'm sorry, at 1090. I mean, is where I'm at Lyft. Sorry, I was reading something else. At 1090 is where I'm at Lyft. It's at 11s. So I'm green in Lyft. I'm green in Google. And I bought these dip buys. I'm green at Ford as well, I think. But Ford might have just turned on me. But I'm going to give Ford some time. I think Ford will bounce back eventually. Ford pumped up yesterday too. Yeah, Walmart, Target, Home Depot. Wait, when is Walmart earnings? Yeah, Walmart Tuesday morning. Is Monday the market closed? Maybe. Yeah, Walmart, Home Depot in the morning. What else we got next week? So yeah, we got jobless claims numbers and PPI today, so it'll be a big day. Let's look at what we got dropping next week. All right, so Monday is a holiday. Tuesday, we don't really have anything. We got existing home sales, manufacturing and services PMI for February. Tuesday, so we can cover that. Wednesday, nothing. Thursday, we got GDP coming out. So Thursday, we got GDP. I guess jobless claims. And then Friday, we've got PCE. So we got the PCE deflator coming out Friday. Thursday, we got GDP numbers. Wednesday, we got European. Wait, what country is this? Is this France? I think France. I see Italy. We've got Italian CPI, and then I think this is France. Could be some type of Eastern European country as well. I don't recognize the flag. Oh, it's German. Sorry, I'm terrible with my flags, apparently. But yeah, so Thursday we've got German CPI. We've got Italian CPI. We've got Hong Kong GDP data coming out Wednesday. And then Tuesday we've got Canadian CPI and retail sales, as well as existing home sales for the U.S., as well as manufacturing and services PMI for the U.S. next Tuesday. And then Monday, I think the market's closed. I'm not 100% sure, though. Excuse me. Yeah, what I will say is just bears, listen. I'm not saying y'all are wrong, okay? I'm not. Just be careful not to do this, all right? Because like what I see a lot happen is I see this happen, right? I see starting here, bears are like, the market's going to crash, and then the market keeps going up. The market's going to drop, and then the market keeps going up. The market's going to drop, and then the market keeps going up. And then we do like a small correction like this, and then we do something like this. And then they say, aha, I told you. But it's like, but bro, y'all were calling this way back here. You know, us dropping down there doesn't mean you were right. You know, and so in order for the market to actually crash, we're going to need to break this. You know, that's like 20%. That's a market crash. You know, maybe we correct some though, and maybe we do something like this. You know, like that's possible. And then we do whatever. We either go up or we go down, or we do whatever. But maybe we do something like that. It's possible. Yeah, lower PPI is better. Lower PPI is lower pricing. Yeah, I generally am a contrarian trader in that regard as well. The more people I hear screaming market crash, the more I'm likely to bet on the upside. The more people I hear screaming bull rally, Santa rally, whatever it is, the more skeptical I am of that rally. Yeah, Bitcoin flying up, Allison, flying up. I kept watching it yesterday. It looked great. Yeah, you love to see it. Again, I'm in Google right now. We're green in Google. So I'll probably take about 40% of the position off and let the rest work. You know. What are the arguments for a bear rally? Bears, listen, it's all up here. It really is. Like we can. I understand that we might correct a little bit. I think we're a little too extended up here right now, to be honest. Just to be fair, I think we're a little bit too extended. I think we've been running up, all the way back since the beginning of December now. Haven't really pulled back much. And so I think at a certain point we're going to pull back. And it's generally going to be around these big economic days. And so I can understand that. We can also see the trend here, which is kind of broken down a little bit. But, I mean, I think there's still maybe a trend that we can draw here. Let's see if it'll let me draw it. Okay, yeah, there's still a trend. Ooh, I like that tool. Look at that. So there's still a little trend that we could probably draw there. So again, we'll see if we hold in that trend or what happens. But do you think the market has and will factor in the changes in the past several CPI inflation report? What do you mean changes? The changes in how they're calculating the number, or the difference versus expectations? Yeah, maybe that might be right, Mello, to be honest. That might be right. Yep, still in Google. Been riding Google up. Like I said, I'll probably take about 40% of that position off. Another trade where people were like, what are you doing, bro? And then it pushed up. Yeah, it's all good. I don't really anchor my VWAP full. Lower is better. It's inflation data, so like lower is always better with inflation data. I don't really trade penny stocks that much, Ben, if I'm being honest, brother. I just don't really trade pennies that much, man. High short float, 80% short float is pretty high though, bro. See it pushing up. Silvergate Capital. I just don't know anything about the company, but like looking at the trend here, starting to get a little run, man. It's up over 100% since its lows back here at the beginning of January. Got a previous top up there, though. We'll see if we can break that. 25, probably a psychological level for this one too. I don't know. I really don't know. I don't know how to really play these penny stock swing trades. It's just not really my style of trading, to be honest. So yeah, I really don't know. Good luck on it though. I hope you guys make some money. What's up, Johnny Trades? Why did the market push on hot CPI data? Well, it didn't. Originally, the market dropped on the CPI data, right? So the market originally dropped on the data. You could look at it yesterday when the data came out at 8:30. Market went down for the most part. It rebounded after the opening bell. So it's like the data was lower. Again, you have to understand, analysts and traders, this is something to really understand. Analysts and traders are not just looking at the expectations, like analysts and traders are also certainly looking at the number relative to last time. And so the CPI data, while it was 0.2% worse than expected, it was lower than the previous one, which makes it time and time again, CPI data is going down relative to the previous release. And that's what a lot of traders are looking at, is like, hey, CPI data is getting better. It might not be getting as better. It might not be as good as expected, but it's still getting better. And that's what Jerome Powell said during the press conference, was that he saw it continuing to get better. Yeah, well, Tesla had dropped already down pretty heavily, though, Mello. If we look at Tesla here. So looking at Tesla. Oh, sorry, I typed in your name instead. Looking at Tesla here. Tesla, Tesla back in November basically gave all these gains back. So Tesla has basically made a U shape You know, like if Tesla was up there breaking highs, it would be a different story. But Tesla basically made a big V, you know, and now it's back up there. So the expectational numbers for PPI today are for, today is the 16th. So expectations for today's data. We got a lot of stuff dropping today, to be honest, man. We really do. All right, just to give you a list. We got PPI data. Wait. Yeah, we got PPI data, housing starts, jobless claims, the Philly Fed Manufacturing Index. We got building permit data dropping. That's a lot of stuff. So we've got jobless claims, Philly Fed Manufacturing data, housing starts, and more dropping. Again, the big data coming out today is PPI, but there's so much data coming out right now. All right, so right now it is 6:30. Oh yeah, you're right. My timer is off. Wow. All right, so it is 6:40 market time. So we got about an hour and what is that? We got about an hour and like 42 minutes. I think that's right. 7:25 a.m. Okay, we're off a little bit. Bro. Bro. We got about an hour and 46 minutes left. Bro. Sheesh. There we go. That's right. All right. Thank you, Pawn. All right, so the rate we're expecting for PPI data. All right, so here's the full list of expectational data today, and it's big, bro. We got a lot of stuff. We got PPI data. Building permits are expecting to show up at 1.35 million. 1.35 million for building permits for January. Jobless claims numbers. Initial claims expected to show up at 200K. Continuing claims expected to show up at just under 1.7 million, at 1.695 million. So 200K for jobless claims, continuing at just under 1.7. And again, I believe less is more with all of these. With inflation being a problem, less is more with all of these. Jobless claims numbers might be higher is better. But with building permits, I think less is better. Jobless claim numbers, I think we're going to want to see higher than expected numbers. The Philly Fed Index is expected to show up at minus 7.4, and PPI data is expected to show up at 0.4%. So that is the data today, guys. 0.4% for PPI. The Philly Fed Index, minus 7.4. Jobless claims numbers, 200K. Housing starts, 1.36 million. Building permits, 1.35 million. So we should probably make a big list of this, but yeah. Hey, what's up, Alan? Yeah, we hit 100K yesterday, bro. I'm just waiting for them to let me do my verification check thing. All right, team. So, what was I saying? Man, ADD, strong thing. PPI is producer price index. It's the other side of CPI. So while CPI looks at how prices are relative to consumers, so it's judging inflation for consumers, PPI is the other side of that. It's how bad prices are for sellers or producers. So it's the producer price index is what it is. What was I doing here? Oh yeah, I'm checking my verification status. My badge. Damn, dude, this thing still says my channel isn't eligible, bro. Reddit to the rescue here. All right, so all right, so what this says is that's going to take a couple weeks at least. Darn. I just want my play button. I want my check mark, bro. Hey, thank you, Snow. Snow says there's other YouTube channels who have 2 to 3 times more subs, yet they don't get the amount of people on their live streams compared to you. Keep doing good. Hey, thank you, bro. Yeah, I mean, Mike, I don't care how much me Kevin has, bro. Like I said, me running this channel, it's a blessing for sure. It's a dream of mine. It's a blessing, man. And again, we get more views than a lot of other channels. So I'm living my dream, you know. People are going to try to, insecure people are going to be mad, but hey, you know, let it out, man. It's okay. You know, we're going to keep growing. Bitcoin almost at 25K. Will it hit 25K today? PPI data is going to affect crypto for sure. How much, we don't know, but it's definitely going to move it at least a little bit because PPI data moves the market and then the market follows. The market moves crypto to a certain extent, although crypto has been pumping up as well. Almost up to 25K now. We'll see. Tesla back up to 220s almost. Doing well, man. Best day of day trading yesterday. Trying to see if I can keep up with the momentum. Nice, Alan. What's up, man? What's up, Douglas? Thank you, info, buddy. Much appreciated. All good, Martin. Yeah, I mean, what's cool though, like what's really cool is like when you look up my trading channel, my channel is in the top 2,500 channels in terms of subscriber rate. So I'm in the top 2,300 channels. My channel is in terms of rank, and in terms of like all-time rank, my channel is 2,290. So it's like we are up there. You know, we're in the top 3K. And what's more important than that is the growth, bro. We have been growing, you know. Like you can kind of see the path up we've been making here. I told people we've been growing like crazy. And we really have. Like, look. So this is our graph here. And so we had a little bit of a slow start to last year. But we are definitely on a growth phase, and we've been moving, you know. Each month we grow by about 3,000 to 4,000 subscribers, you know, which is nice. Hey, what's up? Layla, we're at 1680 ETH test. Yeah, ETH is flying up too. I really believe in ETH as well. Yeah, I'm waiting for the 8 o'clock thing to hit so I can take some off of Google. Just lock some profit in. Yeah, we'll see about crypto, man. Bitcoin has been pumping up. Yeah, Bitcoin pulling back a little bit. The reason Bitcoin is interesting. Hey, what's up, Mark? Yeah, and you haven't been fined. Yeah, I mean, I think it would look bad if they tried to. You know, like if they went after me and ignored everybody else, then it would look bad. You know, like we're the channel that doesn't charge for anything, doesn't claim to be an expert, encourages people not to copy us, tells people we have no idea what we're doing. You know, tells people we're not liable. We have no idea. My catchphrase is, I have no idea what I'm doing. Don't sue me. You know, and so if they went after us and cherry picked us outside of a lot of other people who are doing far worse things in the trading world than we are, then it would probably make them look bad, is what I'm guessing. And I designed the channel this way intentionally, you know, because I don't want the pressure of all that, man. I'm not trying to be, you know, I'm not trying to claim to be some super profitable trader or anything like that. We are green on the year though, so hey, you'd love to see it. We're gonna keep it up. Swing trades have been rolling here. We're green in Lyft today too. People have been asking me about Lyft. We're up in Lyft. Hey, for sure, Pawn. Hey, thanks, man. Appreciate the help, bro. Hey, bro, could you tell me if you know anything about the security token market? I hear that all security tokens that are in crypto are said to be security token, and regulation is going to be to security market. No, I don't really know much about that, to be honest, Martin. Like, I like cryptocurrencies, you know what I mean? But like, I like crypto, but I also understand that like there's a lot of sketchy stuff in crypto as well, you know. Like there's some money to be made, but there's also risks. I think I got to look at these risks objectively, you know what I mean? And so I don't really follow those markets super closely. My business partner Cam, and we're probably going to be doing a crypto show today, but my business partner Cam knows about all that stuff. But man, Social Blade is so off with regards to like how much they say you make on YouTube. They're so off, bro. Like they say I make between $800 a year, bro. Come on now, man. They're way off. Hey, bro, my guy, MS, thank you so much, man. That's a huge donation again, brother. Thank you, man. Wow. What is that? My currency rate is off, but it's still like, what, $100? $110. Wow, man. Thank you so much, bro. That's great, man. That's amazing, dude. Shout out to you, bro. Thank you so much, man. That's crazy. Google. But yeah, it's crazy, man. Thank you so much, bro. That's awesome. I don't even know what to say with that, bro. Thank you so much, man. That's great. Shout out to you, bro. I appreciate you, man. All right, guys. So feels good, man. Thank you so much. I appreciate it. Well, PPI is relevant and important data, but it's not as big as CPI, but it's still big, bro. Like PPI data is still very, very, very big data releases. It's still a very important data release that a lot of people are going to be paying attention to. It's super relevant for inflation. Like I said, we got over 300 people here before 7 in the morning. So it's like people are interested. We also have jobless claims data. We've got retail sales data today. We've got the Philly Fed index data today. So we got a lot of stuff coming out right now. Higher, worse, lower, better. It's inflation metrics. So it's higher, worse, lower, better. All right, team. So we got some time here, man. Market's starting to bounce back up. Google's starting to pump up as well. We are going to start to take some off on Google here. I'm going to take about 50 shares in my Google position off. About 50 shares. Let's see if I can get out on the ask price first, though. Let's try to get out on the ask price here. Make sure my time in force is EXT. There we go. All right, so we're going to try to get out 50 shares here. If not, we'll get out on the bid, and that's okay too. All right, so we just cut our trade. Took 50 shares off. You can see on the last 100 shares of Google here, just to put this in perspective, right? The last 100 shares of Google right now, we are up about $246. About $246 on the last 100 shares of Google, just so you get a little bit of insight into kind of how much I'm making on these swing trades. With Google, like I said, we got about 100 shares left. Our average price is $94.78 now, so that's nice to see. The market's popping up a little bit, and so again, our average price on this is way down here, 94.78, right around there is our average price, way down here. Or no. Our average price is actually, I'm sorry, way down here, 94.78. Our average price for this is right here. And so you love to see it. Again, you love to see it. We're going to keep trying to make money with it. Keep riding it up. Lyft. We're green on Lyft today as well. People kept asking me about Lyft. We're up on Lyft today as well. I'm not going to take any profit on that one yet. I'm going to let that work a little bit. But we're up on Lyft. Ford is the one swing trade we bought a few days ago that we're still red on, but we're pretty much break even. Our average is 12.91. We're at 12.82 right now. So we're less than 10 cents away from our average price on Ford. So I'm, like I said, we could hit that in a few days if we have some good price action here. Pair it with earnings. I don't know. But you love to see it, man. And again, we're green again. Another beautiful swing trade. Again, I told people Google was definitely the largest swing trade I got into. I was spending 10, 15,000 in equity on that trade. And so now we took off a third of it. The third. And depending on what we do, market's kind of pumping up a little bit. So depending on what we do now, we'll probably sit on it at least to right before the PPI data. And then depending on how we feel in that regard, we might take some more off ahead of the PPI report. We might sit on the gains that we've already made and take a profit on already. I'm not sure what we're going to do yet. Any ideas, let me know. I'm open to, I'm open to talking about it. But still green and Ford. What do you guys think I should do here? I'm leaning with taking another third of the position off ahead of the PPI report and then letting a third of it ride through the report is what I'm leaning with. But I don't know yet. I guess we're just going to wait for a second and give it some time, see if we get some, moves up or whatever. PPI is at 8:30 Eastern Standard Time. Right, but that's where I bought it. Like the trading strategy that I use, team, is buying stuff up after big emotional drops. Like Ford released their earnings and we bought it up after the drop, not before. We didn't buy it up before the earnings. We bought Ford up after the earnings report when it dropped down big percentages. Same thing with Google. We bought Google when it was dropping down from whatever catalyst it had that was weighing it down last week. So same thing with Google here. So we bought Google in that way too. So, that's kind of what we've been doing. And again, it's been working. It's been working really well. We're going to keep doing it. It's not going to go on forever, I don't think, though, obviously. I think eventually, eventually we're going to get a correction. But we're going to ride the market up until then. I bought Snap after earnings. Made a bunch of money on Snap too. We bought Snap after earnings. Snap up to 11s. We bought it at like $9.99. The last time we had bought Snap prior to that, we bought it at like 7s and 8s. Yeah, man, I appreciate it. My Australian brother over there. I appreciate you, bro. But yeah, so Snap, we bought it up after earnings. Microsoft, we bought it up ahead of this latest run. So like Microsoft, let me see where we bought. It was a small position on Microsoft, but if you want to see the actual trades that I got in on Microsoft, I'll show you. Trying to think of when I bought this up. Let me see. Let me look at a 90-day chart here. Yeah. So Microsoft, we wrote it up. We bought it at 235, so we wrote it up to 250 basically from Microsoft. Ended up cutting it there, but not a bad little trade on Microsoft in that regard. Snapchat, we bought Snapchat. We bought it at $9.99. We sold it at $11.25 at the top. $11.25. So Snapchat did okay in that regard too. And Google right now, kind of trying to ride that one up. Tesla, we're in Lyft as well. Lyft, we're green on too. We're also in Ford, but I think we're going to get Ford a little bit of time here. And again, I think the logic makes sense here, right? So here's the logic makes sense, which is that, like, look, if you wait for the opportune time to buy stuff, if you wait for the best time to buy stuff, and when things are really extended on the downside, then you've got a lot more room to let it work. Shopify from earnings. Yeah, I don't like Shopify as a company though. Like when I do this, it's on companies I like. Like I like Google, I like Snapchat, you know. But I don't trust. Hey, my guy Kang, thank you, man. I appreciate you, brother. Shout out to you, man. Appreciate the $5, bro. Thank you so much, man. I appreciate it. But yeah, when I buy this stuff up, I buy up companies that I like, right? So Snapchat, Google, Disney is a big one. I always buy Disney when it dips low enough. Like when Disney starts to test low 90s is my buy zone for Disney, or it has been over the last year. Disney starts to test low 90s, I start to scoop it up. Disney is one of those stocks that just has a lot of haters for whatever reason. So it's like every time I do, you get people like, oh, what are you doing, bro? Disney's going to go to 50. And then it doesn't. And then it ends up bouncing back and I make money on it. Again, in trading, you really got to learn to tune everybody else out. Like, I know what I'm doing here. I'm green on the year with this. I make money doing this. And I'm going to keep doing it because it works. Now, eventually, we're going to get in a bear market and I'm going to slow down with this. Because, again, with bear markets, I have to slow down. But with certain blue chips, if we get a bear market, I'm going to start buying stuff too. Like we get a bear market, we get much larger dips. I'm going to really start to buy stuff. Like I've got my buy levels that I like. And I just got to have to sit and wait for them. Hey, thank you, MS. Thank you, man. Yeah, so somebody asked me what the difference between VWAP and anchored VWAP is, right? The big difference between these, I might take I see this starting to dip a little bit. I might take some more off of this here. I'm going to take another 25 shares off of this. All right, so we just cut another 25 shares. We'll hold the 75 shares left. I think 75 is reasonable. Well, yeah, somebody asked me the difference between the anchored VWAP and the regular VWAP. The main difference is that the anchored VWAP, like regular VWAP, is an intraday indicator. It's an intraday trend indicator, right? So you're looking at it to determine what the intraday trend is, basically. With that in mind, right? If you look at Google, here's the volume weighted average price, which is this purple line right here, right? So here's the purple line. You're looking at it to identify a trend. Let's get rid of that 200 EMA. You're looking at it to identify the trend. Now, honestly, the market's been kind of crappy the last few days. But you're looking at it to identify a trend. And, you can kind of see it's choppy at the opening bell. But it holds at the VWAP right here. It holds at the VWAP. It bounces really nicely. And then it kind of maintained over the VWAP. So I don't know how relevant the VWAP was. Yesterday was just a really strong day. But when you look at this, a lot of days have been choppy, but here's a great example, right? So here's the VWAP doing what it's supposed to, which is showing you where there's chop and when there's not. Starting off the day here, we had choppiness. We had mostly sideways neutral activity, right? We had choppiness here. Once we start to hold, you got one confirmation candle there. Once we start to hold, you can see we get confirmation and a trend. Here's another one. And so what the VWAP is doing is showing you this intraday trend. Like here is a downtrend, like that's a downtrend because it's maintaining underneath the VWAP here. It's underneath it. So it's a downtrend, right? Whenever it's choppy like this, it's sideways, it's neutral. And so if you look at other charts here, and you look at like yesterday or the following day here, the following day was purely a choppy day. There was no real edge, mostly choppy neutral day. Up, down, up, down, up, down, sideways. right? You can draw a rectangle around it, and it's just kind of a sideways neutral day. The VWAP is showing you something here. It's showing you that it's sideways. The difference between the anchored VWAP and the regular VWAP is that the anchored VWAP, the regular VWAP is anchored to the open and close of that day, right? Where that's the regular VWAP. The anchored VWAP is anchored to whatever first candlestick that you like, so you can anchor the VWAP to whatever you want to use for it, and so you can choose where to anchor it. But again, I'm mostly an intraday trader. I don't use the VWAP for my swing trades ever. I'm not saying it's not valuable or useful. I just don't really need to use the VWAP for my swing trades. My swing trades, I use less technicals. I use some, but I buy the dip and then just sit. So there's just a difference, but it's preference based. Hey, what's up, Raphael? Hey, good morning, man. Tesla flying up here, man. Yeah, it's not really what I really like to trade with personally. But I like using the regular VWAP because, again, with VWAP here, one of the big edges that you get from the VWAP is that, see, the doctor wrote me these computer glasses. One of the big edges that you get from the VWAP is that so many other traders use it. Like, so many other traders are using the volume weighted average price, right? And so you got a lot of traders basing their trades around it, and so they're buying the dips to it, they're attacking it, so forth and so on. With the anchored VWAP, you're changing that up to where you're using a different VWAP that everybody else is using, that different VWAP than everybody else is using, right? And so it loses some of its edge, in my personal subjective opinion, but everybody's a little bit different here. All right, guys. So yeah, market's starting to break down. We're in Google. We've already scaled out a majority of our position here. Yeah, I don't like these, man. These computer glasses are just kind of off. I have to use these normal ones here. All right, guys. So again, Shopify down pretty big here. Let's look at like Disney. Here's Disney. It's up to 109s. Google testing the previous closing price, but just a huge day for Google. Huge green day. SPY break it down a little bit, but again, we've had such a big green day in the SPY. Ford is actually starting to rebound back up too here. So Ford is starting to go. Again, we'll see if it continues, but Ford is trying to go. All right, guys. So market's starting to break down a little bit. We didn't have any big earnings today, I don't think. Nothing like major. Looking at like what? Apple? Apple is at 155s right now. 155s. So again, we'll see what happens with Apple. It's at 155s currently. SPY starting to break down. Bitcoin at about 24.6K. At about 24.6 thousand. So again, we'll see what happens in that front too. Angry Bob's been here, bro. I saw him a few days ago. There he is, Bob. There he is. Man, we've had some big donations the last few days, bro. And thank you guys so much. I appreciate you guys for sure. All right, team. Still feel like Volkswagen will have a say in the EV market. Maybe, man. I could see that happening. I could see that happening. I don't know if it's going to, but I could see it if it did. Volkswagen, it just seems like their type of niche, right? Name one electric Volkswagen vehicle. I didn't say it, they were doing it already, but I think it seems like their type of niche is what it seems like. Hey, what's up, Shepard? Hey, what's up, man? Good morning. Hope you guys are well today. Market's still kind of flushing down a little bit here. So the market is starting to get a little weak. Toyota, I thought Toyota said they weren't going to enter the EV market. You know? Hey, what's up, John? Yeah, I think EV just the efficiency. A lot of people are skeptical of EV, and I understand the skepticism. I really do. Right. But I think one of the things people have to understand about EV in general here is that like they're more efficient vehicles. And if they're more efficient, then you know, eventually time will bring them more to the forefront, more so than they are now. Efficiency is definitely there with EV. If you look at mileage, much better on EV brands. Speed, much better. Noise on the road, much better. And so I think at a certain point, you have to look at it objectively and say, okay, well, these are probably going to be the next big thing. And they already are to a certain extent, obviously. But they already are to a certain extent. And again, my question here is like, people say the battery technology is the bad part of EVs, right? They say battery tech is what drags EV down. In that regard, that's going to get better, in my opinion. That's going to get noticeably better. People are going to use them more. The technology is going to get better. We're going to find out ways to dispose them. Over time, technology evolves to that, to what's efficient, right? Whatever's efficient, tech evolves to it. And that's certainly the case with EV brands. That's certainly the case. Again, maybe I'm wrong. If there's some arguments on me being wrong, let me know. I'm open to hearing them. I could be wrong. We still got about an hour before PPI data comes out. About 1 hour, team. All right, guys. Google's starting to break down again. I'm glad I took some profit. I took, a chunk of it off. You can kind of see here, we're still up about 200 on the remaining position, down about 7 on the day, but that's all right. Like I said, it pushed up so much. Our average is low 94s now. So we still got lots of time. And we've already taken profit to where, like, even if it goes against us now, it's not going to be the end of the world. What do you talk about, Bender? I'm not sure what you mean, man. Paramount missed earnings. Yeah, let's check it out. Paramount, which is PARA, came in at 8-cent loss per share on EPS, about $8.13 billion in sales revenue. So slightly better than expected for revenue here. So slightly better than expected. But they missed on EPS for Paramount. So Paramount, 8-cent loss per share. They posted about $8.13 billion in sales rev. So not doing terrible, but they got some work to do. Did they post guidance numbers for Para as well? Let's see, did they post guidance? Let me check Para. All right, so Para, they see 24 earnings growth. So they see growth in earnings. See 2024 earnings growth reported fourth quarter. Paramount subscribers at 56 million. starting to get some corrections finally here, and maybe PPI data is going to influence this. But again, we took profit on our Google trade, and it looks like it was the right move. Even with these dips, we're still up about 160 on the remaining position, which is lovely to see. We will take it. So yeah, they had a loss, but they see records. Paramount saw record subscriber growth. And we're also getting breakdowns in Para, though. So Para didn't like the earnings report. Even though it wasn't terrible, they didn't like it. No, we already scaled out. Like I said, even on our Google trade, guys, like we just said here, Google giving back some. But again, if we really look at this team, I mean, let's really actually look at this here. Google, we are still up $150 on the remaining position, 150 bucks. And so, you know, this doesn't mean anything. Like, we already took profit and we're already up over 150 bucks on the remaining position. So point is, we got some time. I mean, guys, you guys got to understand this dynamic of the market right now. Like, I think this nuance is big. This nuance is big, okay? So if we look at the SPY here, SPY down, sure. But look at how much the SPY ripped up yesterday. So, like, the SPY yesterday opened up at 411s and 410s. And so while we are dropping down right now, again, one thing that you got to be very, very careful of here is, like, traders generally say this, right? So traders generally say bears will a lot of the time only bring up the drops, which are here, right? The market's still very green the last couple of days. I think that's an important thing to look at. PPI data is going to influence us all, though. So, like, none of this really matters. And this is a reason. This is the reason we scaled out of our Google trade. We're holding a little piece left. We're up about 170 on the remaining too, by the way, just to put this into perspective. Here's Google. We are up 165 on the rest. We're only down $43 on the position that we're holding right now, so pretty small. And again, I want to give it time. I could add some more to it too, but it depends on what PPI data shows up as. Like, the good thing about having this position is because people could act like I'm losing big or whatever it is, and I can kind of show them I'm not. What do you think the market looks like today? I think the market pushed up really big yesterday. So we're probably, this is probably a little bit of profit taking, maybe some bad news, but I think none of this matters. I think it's going to depend on what the PPI data shows up as today. Jobless claims numbers come out today as well. These are all very big numbers, very relevant data coming out today. So, you know, that's what's going to influence everything today more than anything else. Is the PPI data followed by jobless claims and retail sales numbers. Those are big datas. Yeah, I mean, I think a lot of people are going to be buying these dips too. The SPY at 413 could be a justifiable dip buy. Again, we got less than an hour before the data comes out. Less than an hour. Polestar. Yeah, no freezing video. Yeah, I think it was just YouTube yesterday, to be honest here. Like, YouTube got a little weird yesterday. Because my computer was running fine through all of that, which means it wasn't a DDoS attack. Computer was running fine throughout all of it. So, whatever happened yesterday, I don't know. But all right, Google bounced back a little bit too. And again, you can kind of see our Google trade here up about 170 on the last little bit. No, that didn't have anything to do with it. You think Twilio could reach 100? It could. I don't know if it will, though. We'll see. We also got to look at like Apple here. Here's Apple. Apple at 155 or so. All right, guys. So again, SPY trying to push up. It's at 413.50s here. Years going up. Yeah, but the markets are going to go up long term. Like that's a normal flow of the market here. I mean, we can look back at the history of the S&P 500 and see a very similar thing, as I've been saying here. And again, you guys got to give me credit. I've been saying the market doesn't have to crash, and the market's been moving up really nicely, opposed to what a lot of other people have been saying here. Like the market going up over the last 10 years is not like a shocking thing. It's not. Again, we've had pullbacks. Like, again, the market, the general flow of the market is this, right? Big move up, correction. Big move up, correction. Big move up, correction. That's kind of what happens. We get crashes roughly in between them. But the normal flow of the market is that it goes up. The big edge you get in stocks is that they go up, and trying to trade against that long term. And I mean, over like 5 years plus is a sucker's bet. It's something that people trying to mimic Michael Burry do. And again, that's a very risky thing. I'm not saying the market's not going to correct or the market's not going to crash. What I'm saying is that generally the market's going to move up. The S&P 500 is going to move up. It keeps up with inflation, so like that's what it does. And that's what the market will do continuously, Look, I can look at the 2000s. 2000s. Right. You're going to get crashes every now and then. But what this is really from, what the 2000s are from, the 2000s are from the dot-com bubble. And then within 6 years, the mortgage crisis, right? Which is not generally how it goes. That's not normal flow of markets. Like, that's a little bit different. Again, I'm not saying we're not going to crash or we're not going to fall or whatever it is, right? What I'm saying is that the long-term direction of the market is up. And it's not super arguable really here either. I mean, it's arguing against statistics. Uh, like, look, here's a weekly chart. Right, we can go back to, generally speaking, the market is going to move up long term. Now we're going to have little crashes in between then, and that's fine. But generally, the market's going to move up long term. Like, some would argue the entire point of the stock market is to keep up with inflation, and that's what it does. Not true. Yeah, but I mean, Marco, like I said, man, I get it. You're a bear. And I understand that. You know what I mean? I really do. I understand, man. I'm not against you here. What I'm saying is that long term, the market goes up. Yeah, it could take in outlier situations, which are outliers. Generally, you can look back at every major crash within 3 years. Generally, we're close to highs again. Okay, and so taking one instance where it took 10 years to get back up there is fine, but that's not standard. Right? Standard, look at all the major crashes. All right, we can go back and look at all of them. Uh, some took longer, sure. Like the big ones took longer. Like 1929 took a little bit longer, obviously. But by 37, so 6, 7 years, we're close to those highs again. You look at Black Monday. You look at the 1962 drop. Within a few years, we were back up breaking highs again. You look at 1987. Let's find it. I have to zoom back here. Now there's the 2000 bubble. Here's Black Monday, 1987. 1987, within a year, we broke highs again. Here's the bubble, the internet bubble. All right, within 1, 2, 3, 4 years, really within 3 years, really, we were close to the highs again on a bull run. We got what is this? We got the mortgage crisis. In the mortgage crisis, within 1, 2, 3, 4 years, we were back up towards the highs. All right. So the people who lose the most in crashes are people who sell. People who lose the most are people who sell. Right. Generally, we're going to be back within 5 years each time. Most of the time, it's sooner on average, but within 5 years normally. Now, sure, are there outliers where it takes much longer than that? Sure. But that doesn't mean it's standard. So unless you need to retire right now, right? Unless you need to retire right now, then unless you need to retire right in the middle of the crash, again, I'm not telling you what to do with your money. I'm not telling you. I like buying stuff at the bottoms, to be completely honest, right? But what you really got to understand is that bear markets don't last that long. They just don't. Like, yeah, there have been pockets of bear markets that have lasted a decent amount of times historically, but it doesn't mean it's standard. It doesn't mean it's normal. It doesn't mean that it's what happens normally with these type of things. It's just not what happens normally. Most of the time, they bounce back within a few years. Bear markets typically don't last a long time. And we've been down on the year already for the S&P 500. What we're experiencing right now is a crash that happened. We're experiencing a crash that happened, not a little mini crash to be fair, but a crash nonetheless that happened in 2020 from the pandemic, right? We're experiencing the blowback from that is what we're experiencing right now. It caused supply chain problems. It caused shipping problems. It caused a lot of problems for companies in that regard, and that negatively affected the market. It caused inflation to be really high, but it's starting to get better. Jerome Powell said he thought inflation would continue to get better. Overall, things are starting to look better. Does it mean we're not going to crash? No, I don't know what we're going to do. I really have no idea. But I've been buying the dips after big emotional drops, and I've been making money doing so. Again, we're holding Google right now. We're green on the year using this strategy. We're up about almost $200 on the remaining little half of the position that we had. And so we're doing okay. PPI comes out at 8:30 in 48 minutes. a lot of the equities never came back, even though the indexes were recovered. Yeah, for sure. But again, the companies that didn't bounce back were companies that were struggling to begin with, right? Like the strong companies survived. Like the dot-com bubble in '01. You know, a lot of those internet companies were incredibly overvalued, right? That's why they call it a bubble. It's because it was a dot-com bubble. Anything with dot-com at the end of it with regards to like companies was extremely overpriced, would IPO and get ridiculous valuations. And so there was obviously a bubble in that regard. There was obviously a bubble with those dot-com companies. We had a little crypto crash as well, like years and years ago in 18 or 17 or 18. And so that type of stuff happens. But the companies that don't bounce back are usually struggling companies to begin with. Behemoth companies are usually going to be the ones that stick around. And those are the only ones that I really ever talk about buying. I don't really buy speculative mid caps or penny stocks. I buy blue chips. I buy blue chips that we all know, like Disney, Google, Amazon, Apple. You know, those are the companies I buy. And I buy those companies because regardless of what we get in between, generally those are going to go up long term. And so that's a big edge that I can just kind of sit and wait on. Yeah, I mean, the trend we're in right now, a yearly trend, it depends on which way we look at it. People ask me this all the time. It's like the way I honestly look at this here is I look at this like, look, I think that long term, my bias is to the upside. Like long term, I'm a bull. Over the last year, I think we can kind of see that we're in a bear trend, but I think we're starting to rebound from it. And I think that the bear trend isn't necessarily set in stone. Over the last 6 months, we are starting to look kind of green. You know, we're pretty break even over the last 6 months, but we're at the top of the range. You know, so maybe that means we'll reject at the top of the range, and maybe it means that we'll keep pushing up. I don't know. Over the last 90 days, we've been very strong, very strong. You know, 90 days ago, we were at 360s, close to the lows of the year. And now we are up to 413. So the last 90 days have been very strong. I think if we're in some short-term extension, it's to the upside, though. I think the correction might come into the downside. And I think if we do get a correction to the downside, I'll probably buy those dips. But I'm going to wait to see what kind of value we get with regards to price and some blue chips. But until then, I'm just going to sit back. I know, but JT says, how could the Fed make so many mistakes over the past few years, like all the money, and not pay for that? I think that we already did with 2020. You know, like I think we already did, and I think we have been paying with it with high inflation, which has drive, you know, which again you could look at it with like companies doing better than expected with earnings could signal higher inflation, or however you want to look at it. But I think we already did pay for that to a certain extent. You know, I mean, we've been in a bear market essentially since, you know, the beginning of last year, right? So over a year now, we've been going down for the most part. We're only recently starting to move back up. And so, you know, it's kind of one of those things where we already are. You know, people act like we've just been going straight up since 2020. You know, people are acting like the chart looks like that. It doesn't. The chart looks like this. The chart is down over the last year and a half, you know? So again, and bear markets aren't going to last forever. You know what I mean? Like that's the market over the last year and a half. Bear markets aren't going to last forever. Eventually, we're going to start to get it straight and we're going to start to do better. But maybe not. Again, I don't know. I'm buying dips too, but the bear market's coming. Hey, good luck, brother. I hope you make money, man. You know, that's why you have data. The market is not following data. Well, we've had less than expected inflationary data, or we've had lower than previous inflation data over the last like 4 months. Like every CPI, PPI report has come in lower than the last time. Now maybe it's higher than expected, like this last release, but even that's rare. Most of the time, it's been better than expected, less than the last time. And that's been happening pretty consistently over like 3 or 4 month period with CPI, PPI data as well. So it's one of those things where, you know, we could look at the data either way. Bitcoin's still pushing up. Love you. Bitcoin's still pushing up. Love you. All right. So yeah, so 8:30 Eastern Standard Time for PPI data here. The data's right here. It comes out in about 40 minutes. I guess my point in all this is the thing y'all really have to understand, all right? The thing to really understand is that since I've been running this channel, every year, we got people talking like this. Every single year, without fail, you got people saying, crash is imminent, crash is imminent. They were saying this 4 or 5 years ago, you know? And so at a certain point, I'm not doubting a crash could happen. What I'm saying, it doesn't have to happen. You know, it might, but it might not too. And we got to look at that objectively. We can bring up yield curve and technicals and all that stuff, but the longer you zoom out, the less relevant technicals are. You know, and I think at a certain point, we have to understand that the market is already down over the last year. It's not like we're super extended to the upside. I mean, we can argue it. And maybe we are. Again, it's arguable. But over time, stocks are generally going to move up, regardless of crashes in between that. You know, and the big edge you get in the S&P 500 at least is that the market's going to go up. You know, regardless of what stocks are on top, what stocks are not, any of that stuff doesn't matter. You know, what matters is that the S&P 500, the Dow, is going to go up over time. You know, and that's the most profound edge you're going to get in markets, right? And if you listen to the people saying the sky's going to fall every day, you're not going to capitalize on that. And again, I'm not telling you to buy right now. To be honest, in my opinion, I think we might be a little bit extended to the upside right now because we've been pushing up so much over the last 90 days. But regardless of individual companies, broad market ETFs are going to go up over time. S&P 500, Dow, whatever broad market ETF you want to bring up. You know, you can look at the history of them and see that they go up long term, regardless of crashes in between that. And so unless you have to retire right now, which is barely anybody, you know, that's the big edge you get in markets. And even if it crashes, right, historically, the market bounces back within a few years, usually. Sometimes a little bit longer, but still, the market's going to bounce back pretty fast, usually. All right, guys. Apple. Hey, Google bounced back a little bit here. So we did see Google back up a little bit. Right, for sure, Richard. We buying the S&P 500? I mean, I'm not right now. Bitcoin almost back up to 24.6K, 24.7K. Still got some time, but yeah, real estate's good too, you know. But again, like the big thing to understand about markets is that like real estate, stocks, they're all being used to keep up with inflation. right? Like that's what they're all being used, right? Even if you get a mortgage, I said this yesterday and the day before, I think, but like even if you get a mortgage, one of the big primary purposes of that mortgage is that it keeps up with inflation. One of the big primary purposes of mortgages is that it keeps up with inflation, right? And so, you might get a mortgage as long as it's not like a terrible, like adjustable rate mortgage. If inflation happens, which it's going to over time, your mortgage is going to be less significant, relative to whatever you make. As long as your pay from work increases with inflation, your mortgage is going to be a less significant amount over time because of inflation, right? And so that's one of the powerful things about real estate and mortgages, even in that regard, is that over time, again, you might say you spend, 100K just as an example on a mortgage. In 20 years, 100K is going to be much less money. It's going to be much less significant. And so just like, other ways of benefiting from investments that keep up with inflation, mortgages do the same thing in a different way, but similar thing. No, I'm not buying it. I'm not buying anything ahead of PPI data. In fact, I'm holding Google right now. Again, you can see my Google trade. We are up about 180 on the last little bit. We took some off already. Yeah, probably, I don't know if I'm going to sit on this for inflation data. So I'll probably consider selling this ahead of it, but I'm not sure yet. Economists set up for housing to only be 30% of income, but as interest rates rise, people have been paying even more, close to 70% of income. Yeah, for sure. But it depends on what kind of mortgage they get. Hey, thank you, Tony. Yeah, man, we hit 100K, brother. Super pumped about it. Thank you, man. Well, they always say it's different, and maybe it is, but all right, SPY bouncing at 413s. So SPY popping right at 413 too. Do you think hot or cold on PPI? I really don't know. Expectations for PPI numbers are as follows here. So we'll cover this. Expectation for PPI is we also have jobless claims numbers. So yeah, 0.4% is what we're expecting. 0.4% is what we're expecting for PPI. So again, we'll see. But 0.4% is what the number's looking like. Core PPI is expected to show up at 0.3% on the month. Housing starts are expected to show up at 1.36 million. Initial jobless claims numbers, which are dropping today, expected to show up at 200,000. And again, higher is better jobless claims. Lower PPI is better. So we also have the Philly Fed index coming out. Expectations are for minus 7.4%. Minus 7.4%. We got some other stuff going on today, but a lot of stuff. Jobless claims, housing starts, Philly Fed index, PPI numbers, all very relevant data coming out today. So again, we'll see. Market dipped a little bit, but it's not a huge red day. Market dropped some, but again, the market pushed up a lot yesterday, including Google. Google ripped up big yesterday. Got us really nicely in the green. The SPY ripped up big yesterday as well. So a correction right now, I think, is probably pretty normal. Yeah, for sure, Tony. Yeah, we'll get it soon, man. I'm waiting to apply for my verification badge, which we should get pretty soon. Yeah, so I get the verification badge with 100K. Yeah. Also, we're also going to put it in sub-only mode. So if you haven't already, hit that subscribe button, guys. We appreciate it. Thank you so much for all the support. We are going to throw it in sub-only mode. Thank you, guys, for all the love and support. Let's keep the growth up. No, right now margins are worse. That'll get better over time, Chris. I think. Hopefully it does at least, bro. All right, so a few days ago, we asked people, is the stock market going to crash over the next month? 53% said no, 47% said yes. Google started to bounce back a little bit too. Look at Google pop. Still got about 30 minutes before the data comes out. For scale purposes, how much money are you working with? About 30K. A 20% or more drop, Thomas. Yeah, so Google at 96.60s. Do you use Trade Flash? No, I don't really use that. The crash will be wild too. So much financial tension in the market. Maybe, bro. Honestly, crash would probably be good for my channel, to be honest. I don't know if the market's going to crash or not. Did we do a poll today? I think we did. Let's check the numbers here. Yeah, so we did. So we asked people, does PPI inflation data come in higher or lower than expected? 68% think it's going to come in hot. 68%, 32% think it's going to come in, or 68%, 32% think it's going to come in light. So we'll see. All right, guys. Struggling over there, bro? All right, dude. Love you, man. Hey. Here, hold on. All right. Sorry, back up here. Well, if we crash, 410 is going to be an afterthought. 410 is too high up to be relevant. If we crash, again, in order to really crash on the SPY, we have to break under the lows of the year, which are way down here, right? So in order to really crash, we have to break under that. So we'd have to go like this, you know, which, again, maybe it happens. I don't know. Disney's still up at like 109s. Again, let's see what we show up as here. We still got time. Google bouncing back though. That's nice to see. I mean, Apple trying as well. Disney up to 109s. And again, I've said this before, but people have to really understand my bias here. My bias is that, like, since Disney was down at 93s, 92s, 90s, 85s, people have been screaming crash, right? And trying to make fun of me for buying these dips, right? I bought Disney here. You know, to understand my bias, I bought Disney around here. You know, and like throughout all of it, I got made fun of. I got called a clown. People said, "Aha, this dude bought Disney at $90." And then over time, it was just kind of crickets as Disney continued to push higher and higher and higher and higher and higher. And so again, people were calling for a crash down here. People were saying, "Oh, the market, this is just the beginning," you know, is what they said, right? And now over the last 3-6 months, market has flown back. So it's one of those things where I'm skeptical. You know, anytime I hear people say crash, I'm skeptical. Now, I understand the fundamentals of potential crashes happening, but I also understand that, like, bears are going to say that no matter what, because it's confirmation bias. Like, that's what they want to happen. Like, maybe they're holding long-term shorts, maybe whatever, you know, maybe they want to see the world burn, whatever the reason is. Maybe they want to justify their own, you know, preparations for a potential crash. It's kind of like the easier way to put it is like, okay, you get people who are preppers, right? Who like save up stuff. And that's fine. Be that way. That's all good, right? But sometimes people like that, they tend to overestimate the likelihood of them needing to, because they're trying to justify their own, like, they're trying to justify the work that they put in acquiring all that stuff, right? Same thing with stock market, right? Like, some people prepare for a crash, and so they underestimate the likelihood that it's not going to crash. And so maybe we do, maybe we don't. I don't know. SPY just broke down under 413s though. Still doesn't mean much yet. Market ripped up big yesterday. It's still well above the previous level, so still green. Yeah, they make fun, but they don't live stream their trades. It's easy to say anything looking at charts, looking at the past. In hindsight, 100%. Yeah, 410 is going to be an afterthought if we have a crash. 410 is not going to matter at all. 410 might mean something leading up to it, but do you believe DraftKings will quarter report be better than December? I don't know, man. With DraftKings, I'm skeptical of it too. I really don't know. Here's DraftKings. DraftKings been really strong over the last couple, really, let me see, over the last like 180 days or so. Let me see, since December, DraftKings has made a big pop up. DraftKings is up, what is this, like 80%? A little bit less than 80% since December here. So DraftKings very strong. PPI is at 8:30 in about 25 minutes. But with that said, I think DraftKings is up a little bit too much for me personally to buy it right now. I like buying it on deep extension, and I just don't think we have that. But again, I'm a little bit different than everybody else. You know, it's all good. Most experts cherry pick their winners, 100%. I mean, it's one of the reasons here. Like, my big thing, Chris, is like, I don't claim to be an expert. I have no idea what the market's going to do, and I never claim to be an expert. I don't even claim to be a good trader. People ask me all the time, "Hey, should I buy this? Should I buy that?" I always tell people I have no idea what you should buy. And you know, not an investment professional, not liable if you lose. Yeah, most traders like that, they win and they show you their winners. They ignore their losses, and they cherry pick the green trades they have, and then they ignore everything else. I remember. Hey, thank you. Bitcoin is going to be the one causing the most pain. Lots of people FOMOing at the worst times. Hey, we'll see, man. Thursdays are reversal days. Well, today's a big day. Today there's a lot of stuff coming out today, team. So we've got housing starts, jobless claims, the Philly Fed index, PPI, all dropping at 8:30. So all dropping in over 20, a little bit over 20 minutes, right? These are all very relevant data too, and we'll put these numbers up on screen so you can kind of see what we're looking at today. Building permits expected 1.35 million. Jobless housing starts expected to show up at 1.36 million. So we are writing this now, guys. Bear with me. Just so you can kind of see everything that's going on today. Jobless claims numbers. And then PPI with 0.4%. $8.30. All right, so yeah, so here's all the stuff dropping at 8:30 today, as well as the expectations for this stuff. So here's everything dropping today, as well as the expectations for it. And yeah, we'll see. Yeah, like I said, people that I've never seen before, all of a sudden, at one point, like randomly at one point, talking bad about the music, like cry about it, man. Like the music's not loud enough to make any discernible difference. It shouldn't matter too much. It's just background noise. And again, if I would say a large majority of people actually like the music. More so, the only people that dislike, we only get a very small percentage of people that complain about the music. Like I think I would lose more people if I turned off the music rather than turning it on, you know. Yeah, so jobless claims numbers are one of those things where if we come in higher than expected, for jobless claims. That'll probably cause positive responses in markets. There's probably a positive correlation between jobless claims and the market. PPI, it's the opposite. There's going to be a negative correlation between PPI data and market strength, right? So if PPI data comes in lower than expected and the expectation is 0.4%, then markets are going to go up, you know, but it's going to be accumulation of everything else. As you can see, housing starts expected to show up at 1.36 million expected. And I'm not sure the reaction that we're going to get from that, but it's going to be some type of interesting reaction. So housing starts, jobless claims numbers. We've got the Philly Fed index, and if you don't know what that is, for February, expectations are for minus 7.4% for the Philly Fed index here. The Philly Fed index rates the relative level of general business conditions in Philly. Above zero indicates improving conditions. Below zero indicates worsening conditions. So that is kind of what's going down with the Philly Fed index here. And again, we'll see if we show something good. But that is what the data shows here for the Philly Fed index. Expectations for that are minus 7.4. And again, all this stuff is going to influence markets. PPI being the biggest influence, but the Philly Fed index is big. I should probably put that on the screen too. But all very relevant data, all big data that's important to watch. Yeah, it's all right. All right, team. Let's see what we get. All right, guys. So again, markets kind of slowly giving back some of the gap up that we had in the morning, or giving back some of the gains we made yesterday, I guess is the easiest way to put it. All right, DraftKings still pushing up a little bit. We'll see what Apple does here, what Tesla does as well. Here's Apple, Tesla. Tesla's still technically green on the day, and Tesla's been on one of the biggest runs that we've seen in a minute, man. Let's see if the market bounces back, but I don't know if we're really at a level now where I'd consider buying up stuff. I still think we're probably somewhat extended on the upside from the last couple days. I'm here for the background music only, probably top 3 background music in the world right now. Yeah. Hey, thank you, Jay, my guy. Thank you, man. I appreciate you guys. We got all the music lovers coming out. See, that's my point. Hey, we sold in CPI. Yeah, CPI data came in slightly worse than expected, but still better than the previous time. For PPI, it's a little bit different, though. The expectations for PPI are a little bit different now, though. So PPI expectations now are worse than last time, right? So PPI last time, month over month, came in at minus 0.4%. Now the expectations are for 4%. So at this point in time, PPI is actually expected to come in worse than last time. So PPI is expected to show up worse than last time. And again, I don't know what that means. I don't know if that's good or bad. But I don't know if that's what we're going to show, I guess is the easiest way to put it. But the expectations are for, the expectations are for it coming in worse than the previous time. Again, on the year, PPI is expected to show up at 5.4%. Last time it was 6.2%. So on the year, is expected to show up a little bit less, which is good. But on the month, it's expected to show up at a positive increase, at 0.4% increase versus minus 0.4% the previous time. So again, we'll see. I think AI is rapidly changing in volume, and I like AI. I don't understand. Maybe I think people are speculating that maybe we're in an AI bubble. I don't necessarily think so. I think there's an argument for both, right? I think we could be in a bubble. I think we might also just see a lot of big, strong growth in AI over the next couple of years. I think AI is super interesting, and a lot of people say, "Oh, I don't see the value in it." I don't understand how you can not see the value in it. It's going to save time. It's going to save work. Like, that's why companies like Microsoft are investing billions of dollars into it, is because it's going to save time. It's going to save work. That's what the people really have to understand, is that, like, I can go to ChatGPT and be like, yo, write me a code that does this right now. And ChatGPT will write me that code. It might not be perfect, but that'll continue to get better over time. It's not going to be perfect. But if it shows a use case for it, then over time it will get better. And that's what the investing into it now is going to do. It's going to make it better. I think eventually we're going to see something where we have purely dedicated AI for programming, like purely programming based AI systems that know specific languages really, really well, much better than what we've been seeing over the past few ones, where they know specific languages really, really well, and they can build you any type of component, any type of function, any type of conditional statement, whatever whatever it is, you're going to have AI dedicated purely to that. And I think that'll be really, really good. It'll save tons of time for programmers, and it'll help build more things, ultimately, is what I think. PPI will move the market some. I don't know how much, but it'll move it some probably. It's not just PPI today, though, is the thing to understand. Like, today's not just PPI. Today is PPI, jobless claims, the Philly Fed index, housing starts, all dropping at the same time at 8:30 in about 12 minutes. So that's what it is today. It's not just It's not just PPI. It's a number of different things that are all dropping at one specific time. You know. Nah, it's not gonna do that. Again, the risk of AI is not it becoming sentient. You know, the risk of AI is not that it's going to turn into Skynet. You know, the risk of AI is that it's going to replace jobs. Like, that's what it's going to do. It's going to replace jobs. Not right now. We're not at the level at where it's like that yet. But again, it's not going to turn into Skynet. It's not going to turn into the Terminator. Okay, not right now, at least. Not with what it is. The risk is that it takes away jobs. It makes human jobs unnecessary to a certain extent. That's the big risk right now. And that's why companies are going to, that's why Microsoft and other companies are investing so much into it, is because they understand, hey, once this gets good enough, I'm not going to have to pay a dev 60, 70, 80,000, 100,000, 200,000 a year, depending on the company or where it is. I can instead just get my AI to do it, and maybe have like a programmer oversight with that, but it's going to save time and money. Yeah, it'll probably create some new jobs, but I think overall it's going to be a net loss in jobs. Personally, myself, I think it'll be a net loss in jobs. Well, yeah, AI has been around since the 1960s, sure, but it hasn't been anything like it is now. Like I said, video games have been around since the 1960s, but when you compare those to today, it's not a comparison. You know, same thing with AI. Like, yeah, it's been around a long time, but so is virtual reality. But it's only recently started to be good enough to where it's like, you know, where it's like that. You know what I mean? All right, guys. Tesla break it down under the previous closing price, under 214.50s. Really flushing down here. We got about 10 minutes. Hey, thank you, Tim, my guy. Thank you, man. Right, 100%, Derek. I think that's the future of it, though, and that's what people have to understand. Like, people are like, "Oh, I don't see it." You know, AI is gimmicky. It's like, bro, y'all don't understand. Like, eventually, that's what we're gonna get. Eventually, we're gonna get dedicated programming language-based AI systems that you could literally ask it to, yo, build a component here that does this. Build a, build a function that uses this conditional statement to do ABC, right? Like, eventually you're going to get something like that. And that's why the big boys are investing in this. Again, it's not going to turn sentient. Nobody thinks that. It's just tree structure algorithms. But over time, it's going to save tons of time and work and money that's spent on devs and programmers. And you're probably going to have one lead, like, oversight programmer. Yeah, let me get Telegram out of here. Getting some weird messages. Yeah, for sure. All right, 8 minutes, guys. 8 minutes. Also, make sure that you guys are make sure you hit the live button, the play button next to the live button, or the live button next to the play button to make sure you're caught up on stream. Looking at our poll numbers here, we asked people, 67% of people think it's going to come in higher than expected. 33% of people think it's going to come in lower than expected here. Hey,
inflation is impossible to avoid, but what does it mean for your clients' portfolios? With prices on the rise.
Bro, freaking ads. Ads, man. How dare you? It's an inflation-based ad too, man. They're listening, you know. Bitcoin dropping down a little bit at 24.6K. Well, I'm trying to see what kind of ad this is. This is an ad for iShares. This is an iShares ETF ad. Yeah, anyways, make sure you're live, guys. Make sure you hit the live button next to the play button. So if you don't know what I'm talking about here, a lot of people are like, oh, you're late. Make sure this button is clicked. All right. Make sure this button is clicked right here. Make sure this is red. If this is red, you're real time. If this is gray, then you're delayed. You're behind the stream. So make sure that's red, so you're caught up with the stream team. No, this wasn't a YouTube ad. This was a ad from a website I'm on. All right, guys. Data comes out in about 5 minutes here. 5 minutes, team. 5 minutes. Be ready. 6 minutes, but. All right, guys. 5 minutes. Yeah, to be safe, I uninstalled. We hit 100K a few days ago, Emmanuel, on Tuesday, so the day before yesterday. So if it's higher than 0.4 expected negative reaction, probably. Right, exactly, Rowan. That's correct. So again, higher number is worse for PPI, lower number is better. Yeah, what's up, Emmanuel? Yeah, thanks, man. All right, guys, we got about 4.5 minutes here. 4.5 minutes. What do you guys think about Lyft? I mean, we're green in Lyft right now. Nice little green day in Lyft yesterday. Our average is 1090s. But we bought Lyft. We're up in that one too. I don't know. That's too nuanced. What will happen to stock market if blank? I'm not sure. What's a good number for the market? 0. 0.1, 0.2 will be good. 0.3 will be good. 0.4 is as expected. Anything over that's going to be worse than expected here. But again, we also have jobless claims numbers. We've got building permits, housing starts. We got the Philly Fed index, which is expected to show up at the Philly Fed index is expected to show up at -7.4. -7.4. So a lot of stuff dropping today. Let's pull some of this stuff up. We got all our sources ready. All right, Tesla bouncing back up to 213s now. Tesla's been on a huge bull run. And again, I think if there is some extension, it's extension to the upside. Bears act like I'm just always bullish. I'm not. I think the extension's actually on the upside right now. I think over the last couple weeks, pretty up there. And so I wouldn't be surprised to see a big correction down. But again, you never really know. I've still been buying stuff. But again, don't forget to subscribe, guys. We got about 1,300 people here right now. So, hey, hit that subscribe button. We appreciate you all. Help us get up to 101K. right, guys, 2 minutes. 2 minutes. Data leak, bro. Everybody always says it's leaked. It's never leaked, bro. If it was leaked, you'd see a much bigger reaction here from everybody trying to piggyback off the leak. All right, guys, 2 minutes. SPY has been dipping down a little bit ahead of the open. Let's see what we get. But 2 minutes, a little bit less than 2 minutes actually now. Tesla lowered the price of their cars. Ford had to stop production. Yeah. Bullish is higher than expected. No, bullish is lower than expected. This is inflation data. So lower is better, higher is worse. And that's for specifically PPI. We also have jobless claims where it's the opposite. Higher jobless claims is going to be interpreted as better. Although that's a little bit more arguable. Housing starts. The directional nuance of that, I'm not sure. And then the Philly Fed index, which is manufacturing conditions, minus 7.4%. So I think higher is better. But again, it could be something where inflation fears cause it to be the opposite. We got about a minute left, guys, about a minute left. I'm going to get rid of this. There we go. All right, guys, Tesla's starting to bounce up a little bit again. We got the SPY. I'm going to put the dollar index up here on the left side. So I'm going to put the Dixie up. Or actually, I'm going to switch this. I'm going to put the dollar index on the right side. But 50 seconds, guys, 50 seconds. The Fed always knows. Hey, thank you, Silver. I appreciate you, man. Thank you, sir. Yeah, we broke 100K last week, or last few days. All right, guys, 30 seconds. Hey, thank you, Anthony. All right, guys, 10 seconds. Full list of stuff here. All right, there's the data release. Let's see what we showed. All right, guys, so housing starts came in at minus 4.5. PPI came in at 0.7%, 0.7%. Guys, 0.7%. So 0.3% higher than expected for PPI data. Year over year came in at 6% versus 5.4% expected. So higher than expected here, guys, higher than expected. It came in at 0.7 versus 0.4%. 0.7 versus 0.4%. So higher than expected. You see the dollar index rip up here. And we'll put the data up on screen. But yeah, slightly higher than expected for PPI. Again, it came in at 0.7% versus 0.4% expected. And we will put this data up on screen so you can see it. A lot of other data coming in. Specifically, we had jobless claims numbers, which it doesn't look like they came out with theirs yet. I don't see jobless claims data out yet. Oh, wait, there it is. So jobless claims data. No jobless claims data. But yeah, PPI data came in a little bit worse than expected. We're still above yesterday's lows, though, or yesterday's levels here. So, I mean, we haven't really reacted super negatively. No, it's definitely not bullish. This is bearish for sure. It's worse than expected inflation data. It's higher than expected inflation data. But there's jobless claims. Jobless claims came in lower than expected as well. Jobless claims came in at 194 versus 200 expected. So we will put this up on screen as well. There is the data right there. I'm going to put the rest of the data up on screen. But yeah, market's not loving it, falling down a little bit. The Philly Fed index came in at minus 24.3. That's the worst one here. That was much worse manufacturing conditions than expected. Now, maybe that's going to be seen as a positive for inflation, but that is the full list of data right there. That's the full list. Again, my stream didn't crash, and I told you guys we covered this fast. And we covered that data very quickly once it came out. All right, so yeah, my stream is fine. Yeah, all good. Yeah, thank you. Again, subscribe if you haven't. We cover the data fast every time. subscribe if you haven't yet. We appreciate it, guys. All right, Dixie's flying up here. So look at the dollar index flying up. And again, before the doom and gloom crowd shows up, again, look, here's a 20-day chart in the market. All right. So here's a 20-day chart in the market. Market's doing really well. Hey, thank you. PPI is seller inflation data, right? So it's seller inflation data. So it's pricing for sellers. Market's starting to rebound a little bit though over the last couple minutes here, starting to pop back up. Again, we'll see if it continues. I mean, inflation data again higher than expected here, so generally not good, but you know, higher than expected here, which is interesting. And markets are kind of bouncing back a little bit from this, which is strange here, but hey. Yeah, kind of chopping back and forth right now. See if the market tanks here, but again, pretty bad inflation data. Market's starting to pull down. Dollar index starting to move up. Let me overlap the volume here so we can really see it. All right, Bitcoin pumping up though. Bitcoin could be helping the market as well. But yeah, I don't see any of this data being positive. PPI came in higher than expected on both core PPI and regular PPI. Philly Fed Index indicated much worse manufacturing conditions. Jobless claims numbers came in lower than expected, which again could be worse for inflation and interpreted as worse. So yeah, right now that's what we're getting here, team. So far, didn't get too much of a... I mean, we got a negative reaction for sure. But Bitcoin is pumping up. Look at the right side here. Bitcoin. Dollar index is starting to dip too here, which is interesting. But look, Bitcoin pumping up to almost 25K. All right, and we are shorting the regular E-mini here after this response. So we are shorting it. You can kind of see what our P&L is here. Nice. Gonna go ahead and cover a little bit more. Catching the low break. We're gonna go ahead and get out there. So not too bad today. Market looks weak. A little bit of a delayed response here. You are too bullish. Bro, I literally said I thought we were extended heading into this report. I literally just made about $550 shorting the market. You know, come on. Don't be emotional, Bears. Come on now. You know. I don't really have too big of a bias. Short term, I'm definitely bearish. And I said I thought we were extended heading into this a bunch of different times. I think we got a little bit of a delayed response. All the data was mostly bearish. You know, PPI was higher than expected. Jobless claims were lower than expected, which could be worse for inflation. The Philly Fed indicated way worse manufacturing conditions. They expected minus 7.4. They ended up showing minus 24.3. Thank you, Prime. I appreciate it. I'm definitely biased for sure in different directions, 100%, without question. I'm definitely biased in specific directions, you know. But as I said leading into this, I thought that we've just pushed up a little bit too much over the last 20 days here. Like a 20-day chart's still very green. I mean, let's zoom out here. I mean, it kind of cuts through. When in doubt, zoom out. You kind of cut through a lot of the nonsense, you know. Like having one bad release isn't going to tank the market. But we're going to have to see how it affects everything. But so far, SPY's dipped down a little bit. Still above yesterday's levels, though, just to put this into perspective, right? So CPI came out. We're at about 411 right now. You know, so like we opened up yesterday at like 410.50s. So we're still above yesterday's open. Now, will we drop more? I really don't know. We're just going to wait and see. You have a slight bull bias, but you're pretty fair. Yeah, for sure. That's what I try. Like, I probably got a little bit of bull bias, but it's not like I think the market's just going to never-endingly go up. You know what I mean? Like, I told people ahead of this release, I thought we were extended on the upside, and then I thought that we were pushed up a little bit too much for my comfort. I wasn't buying up anything big. We bought Google on the dip, but our average in Google, as you guys can see here, like, we already took the majority of the profit off before this release because I was kind of worried this would happen. And even on the remaining 75 shares, which is, you know, we had 50. We had 50% more. We had 150 shares. Our average price is $94.20 right now. So, you know, we're still up almost $2 a share on our Google trade. So it's like, you know, we're a little bit more bullish bias because I mostly buy stuff on swing trades, but I also understand the extension that we're currently in. Effects on the overseas market. I'm not sure. I mean, I guess the U.S. market will affect everything, but I'm not sure what we're going to get for these markets now. It depends on what we do at the opening bell. This is not really a huge move, to be honest. Like, this isn't the biggest move I've ever seen. You know, we're still above yesterday's open. So, you know, while the data is not great, again, if we take all the data over the last 3 or 4 months, we've had more positive releases than negative. Like, and it's not always going to be positive and just never be negative. We're going to get negative releases like this. The question is, how much does it affect this overall? How much does it affect the current trend that we're in? Again, if you look at a daily chart, we're up pretty big over the last month or two. You know, you zoom out here. You know, the trend of the last, really since mid-October has been very green, you know, with pullbacks, but been very green. But I think we're at the point now where we might start seeing a dip down to like $400, and then we might get another retest and bounce, or we could just kind of dump down like that. I don't know. But yeah, that's what I see right now. Yeah, I'm still in Ford. But again, my average on Ford is $12.91. And so I am 15 cents away from that with a very small loss, you know, on it. Again, Google, we made a bunch. My average on Google was like 94. So that was our biggest trade. And yeah, we already took a lot of that off and we're still very green. We're up over $120 on the rest of it. So, I mean, you know, Lyft, we're up in Lyft as well. We're green on Lyft also. So our average price on Lyft, which is at about 1130s right now, is 1090s. That's one people have been bringing up, like, how's your Lyft trade? My Lyft trade's green now, guys. The only swing trade that I've been talking about over the last few days that I'm red on is Ford. Everything else I'm green on. I'm green on Google. I'm green on Lyft. I've already scaled out of most of Google. Haven't scaled out of Lyft yet. I guess I'll just let that one work. Housing starts data came in at 1.309 million versus 1.36 million expected. So yeah, market's testing lows. Got a little bit of a delayed response. Still over 410. I think 410 will be an interesting level. Bitcoin trying to push up. I don't really have any specific rule based off a percentage read. I just kind of play it by ear most of the time with regards to taking profit. Like I said, I sold most of my Google trade. Again, you can kind of see we're up about 136 at the open. We're down about 72 on the day, but we pushed up so much yesterday, and we took most of the profit off already. So we took most of the profit off up here at like 97s this morning, 96s, 90 or 97s, 96.50s. So we already scaled out of most of the Google trade. So even if this one continues to drop, we're not going to lose money on the trade. Again, we're in Lyft. We bought Lyft at 1080s, or what was that, 1090s? And so again, we bought Lyft way down here. And so we're still pretty green on that one. Ford, our average price on Ford right now is $12.91. So our average price on Ford is literally right here. So it's like, we're down what, 15 cents? Not very much. Not a huge position either for Ford relative to the range, and even it's starting to bounce back up a little bit too. So we'll see what happens there. Apple started to break down at 154s. PPI data is higher than last month. The expectations, like we said before the release, the expectations were higher. Last month, PPI came in at minus 0.2%. So the expectation of 0.4% was already higher than expected, and higher than last time at 0.7%. So higher than expected, higher than last time. But it was already, the expectation was set higher than last time anyway. No, it started to pump. It got rejected. Yeah, that'll be a good question, is do we do 50 basis points for the next rate hike decision? I really don't know. Again, I think people try to criticize my swing trades, but again, it's not arguable. I'm very green on the year with my swing trades, and I make money on a large majority of them. If you look at the ones I've bought, Disney, Google, Amazon, Ford is red, but Lyft, Google, I would say I'm probably green on at least 80% of my swing trades over the last couple months, at least 80%. Now, maybe not Snapchat, same thing. Now, I'm not going to be instantly green. And I think people a lot of the time try to bring up, they're like, aha, you're red. It's like, yeah, but it's a swing trade, and then whenever it's green, they're just kind of quiet. But again, we've been very profitable. I made a post yesterday, and I told people we were starting to scale out of our Google trade because I was worried about the PPI report. But we made a post yesterday about our swing trades. Microsoft. We bought Microsoft and rode that dip. But I told people, I said, starting to scale out of Google yesterday. My swing trade's been very profitable. Feels good for sure. And we'll see if it continues. But you'll have to see it. Market's breaking down a little bit now, though. It's at 410s. Let's watch and see if we rebound back at 410. 410 is a big level. It's a psychological level, and it's a previous support or resistance area. Where are you looking for a long on the SPY? Oof. I'm not gonna, like I said, I told people this is what I would expect to happen if we're gonna continue on this trend. At least I think what I would expect to happen is a dip down to 400. I think, again, if you look at the market, guys, over the last 4 months, if we really look at the market, I would expect something like this to happen, right? So far we have pumped up for a while now. We pumped up big for a while now. Consolidating into this here, we're about right here now. I guess what I would expect is a pullback to 400 right here. And then maybe we get a bounce at 400. We could also break down a little bit, but I think this is where we'll start to kind of go like this. And then maybe we'll make another leg up and continue like that. Maybe not. We could just dump down here and just kind of, drop like that. That's certainly possible too. But again, I don't know. $400 seems like a reasonable pullback zone. And I think if we do pull back to that spot, I'll probably start buying up stuff again. But for now, I'm just kind of sitting back waiting. No, it's subjective. Where Bitcoin turns bullish is subjective too, for sure. The next rate hike is going to be in about a month from now, in mid-March. So the next rate hike is going to be in about a month from now, mid-March. Also, guys, y'all check out TopStep. You want to trade these big Echo releases? Check out TopStep's funded account program. They give you a demo. If you look at the E-mini on the right side here, and you look at the SPY in the middle, you can day trade the right side here with no PDT restriction. You can day trade, short it in futures without restriction. TopStep is the most legit futures funded program in the world. They give you a demo and they test you and they see how profitable you are. And now my TOS account's got, tens of thousands in buying power. I don't really need to get funded, but for those that don't have as much money as me, TopStep can be a great way to test your skill. They give you a demo. The base one's less than $140 a month if you use my link, right? So it's less than $140 a month. They give you a demo. If you can hit the target while following their rules, and they basically test your profitability. If you could pass that testing, they fund you with a 90% split between $50,000 up to $150K, with a 90% split once you're funded. And so it's a great thing where it tests your skill, and trading is about learning how to perform under pressure. That's what trading is about. It's learning how to perform under pressure. TopStep gives you a little bit of pressure, but it's cheap. If you lose, it's not the end of the world. If you lose, you're down $140 a month, and you can reset for $100 as well. And so it's very cheap. You can test your skill. It gives you some pressure, so a great middle ground of pressure, but not the full extent where if you wanted to try the futures market yourself, you need to put up like 10K. You're risking thousands of dollars, right? And so in that regard, TopStep is a beautiful way to test your skill. They are a sponsor of mine, and so I'm definitely biased in their favor. And to be fair, I think most people are not going to be able to pass the testing, but that's the point, is because if they tried to put the money up themselves, they would lose so much more, right? They would lose so much more. And so again, if you want to check out TopStep, here is the link. Great way to help support your boy here in this channel. We appreciate the love and support. There's the link right there in chat. Posted the link right there. Check it out. Well, I think most traders lose, Chris. I think most traders lose. I think that's an obvious, self-evident thing. Most day traders lose. Doesn't have anything to do with TopStep. It's just 90+% is the cliched percentage that lose money in day trading, and that's probably pretty accurate. I'll say this: TopStep pays out in actual withdrawals millions of dollars a year in actual withdrawals, not just funding, and actual people taking money from them. So, again, the best way to test your skill in trading, in my opinion. All right, so definitely on a bear trend from this data. Another really cool way to help support the channel, and another great sponsor of mine that's actually really cheap here. So let me zoom in right here. This is called Chart Prime. It's a trading view indicator service that you can use in stocks, crypto, forex, futures. You can use them in these funded account programs. But check this out. It's actually really cool. So this is Chart Prime. They are a sponsor of mine, and so I'm definitely biased in their favor. But what they do is they automatically document support or resistance, ranges. If we zoom out, you can kind of see the range. They label the support or resistance levels from top 10. So the dotted line is the strongest one, and they also show you reversals, and this is just a small percentage. They show you chart patterns and all this other stuff, but just look at how accurate this was. This was yesterday's price action, and they don't repaint. And so they're not correcting this to look more accurate than they are. They don't repaint. These are the actual reversal signals that they gave you. Look, in pre-market yesterday, reversal down, huge drop, possible reversal up right before the open, big bounce, possible reversal down after that, big drop. You wait a little while, you get another reversal down signal way up here. Nice drops over the next like 30 minutes. Another reversal signal here. Again, nice drops over the next 30 minutes. Up here, we get two symbols. We get a bearish engulfing and a reversal down signal, which is my favorite, finding multiple showing up together at once. And again, we get a really nice drop up to the next reversal up signal where we get a huge bounce over like an hour period of time. This one might be labeled as wrong, but look at how accurate this was. I can't guarantee you're going to make money, and this is just a small percentage of what they offer. I'm definitely biased because they're a sponsor of mine. But again, it's a trading view service, so you can use them on stocks, crypto, Forex, futures, whatever you want to use them on. You can use them, and the base one is very cheap. It's like $35 a month or something like that right now, so very cheap. And if you want to check them out, here is the link. Again, they are a sponsor of mine, but you can get 40% off using my link here at checkout. So check them out. Here's the link. Great way to help support your boy here in this channel. Yes, Stacy. Sorry. Top Step's a sponsor of mine. We're not going to post the competitors to sponsors. Yeah, for sure, Howard. 100%, man. Hey, thank you, bro. Yeah, man. Chart Prime, like I said, legit useful. Legit useful. All right, guys. So is the breakdown going to continue here? We're down to 409.50s here. 409.50s. Again, you can find both of these in the description if you're interested in checking them out. All right, guys. So you ever tired of trading, John? Sometimes the market seems like a waste of time. No, not really, man. Again, my swing trades have just been powerfully profitable. You know, I'm super pumped about my swing trading. When you're profitable in something, man, it gives you a lot of optimism, and that motivates you to keep it going. You know what I mean? And in swing trading, like I said, I'm green on the year. We've been killing it in swing trading, man. I'm super excited about it because, again, the strategy I use works. Does it work every time? No, but it works for me personally. And I think anybody that watches this stream consistently understands that, like, again, I might get hate when I say, yo, I'm buying Snapchat here. You know, yo, I'm buying Disney here. You know, yo, I'm buying Lyft here. Yo, I'm buying Google here. You know, I might get hate, right? But time kind of proves a lot of those positions right. Again, with Google right now, even after these big drops, right? In Google, we started scaling out yesterday. We made a Twitter post about it. So we scaled out most of the trade before this big drop, luckily. But even on the remaining 75 shares, we're still up $120 on the remaining 75 shares here. So Google, we were absolutely right on. Disney, again, we bought it at like low 90s. It's at 108 right now. Lyft, 1080s. It's at 1130s, 1120s. You know, Snapchat, we bought it at $9.99 like a week or two ago. And right now, Snapchat's at 1150s. It got as high as 1250s, 1240s. So again, time has kind of shown, regardless of long-term outlook in these companies, a lot of people's argument is like, hey, these stocks are going to drop long-term. Maybe. But I'm picking out blue chips that's less likely as well. You know. Hey, what's up, Don? Yeah, maybe a big reversal. I don't know, man. Maybe. Possibly. Again, you can kind of see we're up about 550 on the combine today, about 550. Scalping short. The movement from PPI coming out. Maybe Chop Fest. I don't know, AK. We'll see, bro. I'm just glad we didn't lag out at 8:30 at the opening bell, man. Or right at 8:30 when the data came out yesterday, bro. I was very convinced that I was getting DDoSed. I was super convinced that I was getting DDoSed. In hindsight, I don't think I was. My whole internet worked fine. I guess it was just server problems. But yeah, I'm just glad we didn't lag out at 8:30 right on the drop. On your swing trading, if you sell all your shares, do you just wait until red day to buy up again? Sometimes. What I really do is, like, with specific stocks, I will develop what I call like a buy range, like a price point in blue chips. It's only in blue chips. It's not it's in stocks where it's like, if I'm wildly wrong, I can just hold it, and most of the time it's going to come back. And I've got enough equity to throw around to where it doesn't matter too much. But I develop what I call like buy zones, where I consider the price objectively cheap. And, or subjectively, I guess, since it's my consideration, but I consider the price cheap at specific spots, right? With Disney, it's low 90s. I'm not going to buy Disney at 110 or 108. It's just not cheap enough for me. With Google, it's under 100. I start to buy that dip. There's a bunch of different ones. With Snapchat, it varies. It depends on the range, but it's usually within $7, $8, $9. Sometimes I push it and buy it a little bit after that. But I develop buy zones, and I look for big emotional drops. Like a great example of it is Amazon. A quarter ago, like 3 months ago, posted mostly mixed results, slightly negative, and Amazon dropped 20% very quickly, very fast. Right after the earnings report. I bought that dip and sat on it for like a couple days, and within a few days Amazon had rebounded 10% plus, and I had made some money on it. Those are the easiest ones for me to capitalize on. I just look for emotional overreactions, and of course, like, long-term bears are going to say, oh well, that's a bad buy, and they say it every time, and maybe they're right long term, but usually these trades are green within a week or two. Most of them are green. Some of them take a little bit longer, and some of them are green instantly. Again, generally, the bigger the drop, the bigger the emotional drop, the faster it's green. And I also have a lot of equity to throw around to where I can kind of keep adding to these if I need to. I can average into a really solid position. The farther down it drops to really help my averages. Again, it varies, and I'm only doing it. I'm not doing it in most mid caps. The only one I kind of mess around with is Snapchat in that regard, but most of the time it's just strictly blue chip, healthy companies that are obviously going to be around in 5 years. Those are, again, the big edge long term is markets are going to go up most of the time, so I just try to ride those moves and pick my stocks right on dips. I also take profit very quickly once I'm green, because that way, if I'm wrong, then, even if it goes against me after I've taken profit, like Google, for instance, right? Google, I took profit very fast. I announced it yesterday at like 96s, 97s. So even though Google's down, I'm still up over 100 on the day after taking profit, which means I'm up much more than that, if you consider what I took profit at the open, or before the PPI report today. And when you add all those things together, which is like long-term strength, taking profit fast, being able to add to my losing trades, my accuracy is pretty high up there, and again, there could be a day where I get stuck and the stock just completely goes against me. But again, I have enough equity to throw around to where I can sit on stuff if I need to, and none of the positions I'm taking are really huge. The only time I start to scale into a large position is if it's a stock that I think is obviously going to be much higher over the next 5 years, and I can justifiably add to it. And establish like a big position, like Disney is something I'll do that with. And Disney's got a lot of haters who overestimate the likelihood of it failing, is what it is. So emotional overreactions is what I look for. Yeah, that's exactly what I do, Andrew. Works really well, Hey, what's up, Justin? What's up, man? PPI's out already. Go read the results right there at the bottom of the screen. You can kind of see what the results are. Do you care about wash sales? No, not really. To be honest, I don't really lose much on these stocks, and all wash sale really means is that you can't write off your losses on a stock that you've since made gains on. So it's like if I lose $100 on Google and then I make $100 on Google, I can't write off the loss, and then even though I'm actually net profitable or break even on Google, I can't write off the loss even though I didn't lose, because I ended up making that money back later on. That's the only thing the wash sale rule does, is it just makes it so that you can't write off losses that you've since recouped. But again, ask your CPA. I have no idea what I'm talking about. Ask your CPA. Stevie, PPI came in worse than expected for sure. Higher than expected at 0.7 versus 0.3, or was it 0.4? 0.4% expected, showed 0.7, so about 0.3% worse. That was kind of expected though, because again, you guys got to understand, CPI came in worse than expected as well, right? And so usually it's two sides of the same coin, if that makes sense, right? Where CPI is buyer inflation, PPI is seller inflation, right? So if CPI came in worse than expected, it's logical to assume that PPI is going to come in worse than expected here as well. So, we'll see what happens, but all good, Will. No worries, man. Yeah, market's dropping for sure, but again, you're gonna get doom and gloom people out here who are just like, oh, the market's crashing. A 20-day chart kind of disproves that. You can zoom out here. Here's 20 days. The market's very green. 10-day chart, I think the market's probably green too. Let me see. Here's a 10-day chart. I'll zoom out. 10-day chart, we're slightly red. 20-day chart, we're very green. 90-day chart, we're very green. Kind of break even on a 10-day chart. But we had bad data come out. The next big data drops next week. Next week we get Wednesday. We have something. Let me see. Next week we do have some data coming out that'll influence things. They're not going to influence anything as much as CPI Tuesday, but it will move markets to a certain extent. Next week we've got PCE deflator coming out. So yeah, next Tuesday nothing. Tuesday we got existing home sales, manufacturing, and services PMI. Wednesday we don't have anything. Thursday we've got PCE and GDP. So GDP is expected to show up at 2.9% GDP growth. And this drops Thursday. We also have jobless claims Thursday. So GDP data dropping Thursday. Very big data, very influential data as well. So we'll see, but that's kind of, yeah, for sure. we're going to get ready to trade. All right, stuff's starting to bounce back a little bit here. Nothing too crazy yet. We're going to let the open happen and see what the market does. Yeah, I mean, y'all got to understand, I don't know them, Howard and Snow. Again, you can say they're good. Snow can say they're bad. Again, I really don't know them. I'm pretty against courses. I think most of the stuff in courses is publicly available out there somewhere. But again, I don't know them specifically. You know what I mean? So, it is what it is. Yeah, we got Walmart earnings next week. We've got, like I said, next week is not a super slow week. We got Friday, we got PCE data. So Friday, and PCE data is actually what the Fed uses to influence their rate hike decisions. And so, we get a really low PCE rate. The Fed still might do 25, or you know what I mean? Because the Fed uses PCE as the more accurate inflationary gauge. Again, I'm not saying that's what's going to happen, but I'm saying that's kind of what happens. That's what the Fed does, where the Fed uses PCE. The Fed likes PCE, basically, in terms of identifying inflation. So PCE drops Friday of next week. We also have another really important metric in GDP data coming out Thursday. So GDP drops Thursday. PCE data drops Friday. All very relevant data here that could move markets. All right, guys, we got about 20 minutes until the opening bell, guys. 20 minutes. Again, we made a little bit off of the PPI announcement. How's Top Step going for you? Slow. I mean, we're green in the combine, but it's going slow, man. Like what I've been trying to do is I've been building up a cushion and then taking large swings once I have a cushion built, and then last time I got bumped back down. Still green on it though. And so we're kind of building another cushion and then taking a large swing. We've been trading the E-mini a little bit more, but again, my TOS account's got tens of thousands in equity and more so in buying power. So, I mean, I'm already funded in my account, but I think Top Step's a really great way if you don't have as much money as I do and you want to really test your skill. Like I said, you can put up the money yourself. Say you try to trade futures yourself, right? There's no PDT in futures, and it gives you exposure to day trading stocks. You can day trade the S&P 500. And what you look at right now on the screen is the S&P 500 in futures. But, you can either put up the money yourself. Say you put up 10K yourself, right? Risk that. You put up 10K, you risk that. You lose, you could be down $1,000 or more in that, right? Just a lot of risk. And so if you've never traded futures, there's a lot of risk in putting up the money yourself. It's actually a much better thing to try one of these funded account programs. And I wish I had it. And I'm biased because they're a sponsor of mine and they pay me money. And I can't guarantee you're going to pass it. It's difficult to pass for sure. But I wish I had something like this when I first got started trading. Because when I first got started trading, I tried putting up my own money and I lost thousands of dollars. Where it's like if I would try this, the base one's $140 or less a month, right? And with that, I can test my skill, have some pressure, not the full extent of like a real funded, actual equity losses. And it would ultimately allow me to test my skill without risking a ton of money with some pressure, which is a great middle ground, a good idea, I think. But again, I'm definitely biased because they're a sponsor of mine. Yeah, I'm just gonna go ahead and ban you. I've never seen you before, and you're just kind of being critical. I'm not bragging about how much money I have. That's a ridiculous thing. Like that, you're just being desperate to criticize, to be honest. I'm not bragging about how much money I have. What I'm saying is that I don't necessarily need to get funded. Like it's not a super necessary thing because I already am funded and I have enough money to where I don't need to get funded. Right. And I think that's a relevant thing for what I'm talking about. I'm not bragging here. I'm saying, hey, I don't need to get funded, so I can take my time and do whatever I want with these funded programs. But for a lot of people who don't have it like that, then these funded account programs can save them time and energy and protect, from losses while still being able to test themselves as traders. I think that's a good idea. But again, for you to criticize that, it just means you're being a little bit desperate to criticize, and that's okay. But, if the first thing you're saying is negative, you're just going to get banned. Good day, sir. And yeah, we'll see what PCE data shows up as. The market's been mostly sideways since, the last 20, 30 minutes, the market's been sideways. We had some big drops from PPI. Not crazy big. We're not crashing or anything, but we did drop down to 410s or so on the SPY. And now we're mostly sideways. Top 3 braggers in the world right now, for sure. Top 3, for sure. I mean, when you look this good, how are you not going to brag? When you trade this well, when you this attractive, humility just flows through you. And, listen, I'm sorry, guys. I'm sorry I look this good. I can't help it, man. I was just born this way, and, it is what it is. Cheers to you, Market sideways. Let's see if we break out of this range. Yeah, I don't need to disclose how much I make. They're a sponsor of mine. They pay me money, Like I said, if I disclose it too much, then people are going to get mad at me for bragging, So it's like, on YouTube, you really can't win, bro, no matter what you do. If you don't talk about it, then they're going to say you're not being transparent. If you do talk about it, then they're going to say you're bragging too much. Like I said, people are just, in the end, you got some people that are just unhappy with themselves, and just let it out. It's okay. You'll get banned for life here, but let it out. It's okay. Data's already out, Justin. It might be right behind me. It might be right underneath me right here. I'm not saying it is, but it could be. It might be underneath. Sideways range for markets here, guys. And again, we'll see what happens. But Rich man, I don't know why, but I'm definitely one of the top 3 criers in the world right now, for sure. Definitely top 3. Nah, you gotta troll the haters, the guys. This is the only way you can really approach it, The micro NASDAQ 100. I like the micro NASDAQ 100. I trade it sometimes. It's got what, like $1 per tick movement, something like that. I've traded it before. I usually stick with the E-mini and the micro E-mini, but I do a little bit of both. Right, dude, I'm the top 3 criers in the world right now, for sure. All right, market testing lows. Hey, thanks for hey, thank you, Brian. I appreciate the support, man. Thank you so much. Yeah, market testing lows of the day here. Testing it now. Again, we'll see if we hold. We got about 13 minutes until the opening bell. About 13 minutes. Let's see. No, I don't really trade natty gas. Just not really. I mostly stick with the S&P. Personally, myself. as well as like swing trading as just individual stocks. Hey, thank you, Stevie. I appreciate it. Thank you, Billy. I appreciate you, man. Hey, thank you, Keith. Hey, you know it, Rich. My guy. Thank you, man. Keith, this channel is becoming my best morning ritual. Thank you, man. Thanks so much. Wait, is Chat GPT Plus out already, bro? Is it really? Is Chat GPT Plus out already, man? Yeah, all good, JT. I was just kind of messing around, man. It's all good, bro. Like I said, I get it. Hey, thank you, Casper. Hey, thank you, man. I appreciate you, Slayer. Shout out. What is that? €5? Thank you, man. I appreciate you, bro. Yeah, I'm late on the Chat GPT Plus here. Where do you get it? What's the difference, though? Is it better at programming algorithms? Is my question. As a programmer, that's what I want to know. Is it better at programming algorithms? What's the difference between Chat GPT Plus and regular? 12 minutes, guys. What's the difference, though? Is it more finely tuned? What's the difference? That's my real question here. So it's faster. Personally, I think John is a rock star. It's so hard to trade live in front of people. So much pressure to be right. John is very wise and mature about his approach. Hey, thank you, man. Yeah, I appreciate it. Like I said, I always try to tell people I have no idea what I'm talking about for a reason. It's because I don't want the pressure of like, hey, this guy said this. I still get people trying to bring up every little mistake I make. But I mean, listen, when you look this good, that's going to happen. SPY trying to bounce back after breaking lows here. Let's see if it rejects at this previous low of the day. But no, I appreciate it, man. Thank you. Yeah, does it connect to the internet or is it just faster? I don't ever have any problem getting Chat GPT. Like I can already kind of like use it whenever I need to. The speed doesn't really matter that much. I know it has like an hourly limit on what you can ask it though. Yeah, does it connect to the internet like the Microsoft one? I'm waiting for that one to come out. I'm on the wait list for Microsoft, but they want me to set Microsoft as my default browser, and I refuse to do so. It says I'll get it faster priority if I do it, but I'm refusing to do that. Let's watch the low of the day level here. We're pulling back to test it now. I don't know if this dip is dippy enough for me. The way of base. I just don't know if the dip is big enough. Nice retro. Yeah, man. I don't know if the dip is dippy enough for me personally right now. Again, I think we've been pretty extended on the upside. Yesterday, we had a huge green day, and most of the stocks that we're looking at are still above yesterday's open. Google's above yesterday's open. Apple's above yesterday's open. Ford is above yesterday's open. Lyft above yesterday's open. SPY in general above yesterday's open. And so most of these are still pretty green, to be honest. No, SPY is actually below yesterday's open, actually. But still, a lot of stuff is. So again, over the last 2 days, we're flat, basically. That's what we're saying. So again, I just don't know if it's dippy enough. I wasn't willing to buy up stuff yesterday or the day before, so I just don't know if I'm willing to buy up stuff now. I'm gonna wait, basically. Hey, thank you, Chronic. I appreciate it, man. Okay, got you, Howard. Thanks for that update, man. I appreciate it. Yeah, I was never going to set it anyway, but I appreciate it, man. All right, so again, we're right at that previous low level here. What's up, Derek? Opening's gonna pump us up so fast. I don't know if I'm sold on that either, man. Maybe. We're at 409s on the SPY right now. We could bounce. S&P 500 is bouncing back. I'm not sold on anything yet, though. I'm just kind of sitting here. Got about 7 minutes until the open. Yeah. Maybe it's bear time. I don't know. Let's have another poll. Okay, I got you, man. All right, so what's the poll numbers? Let's see what we got. All right, so votes were 69%, which, I mean, a lot of them are voting after the data actually came out here. Let's start another poll here. What do we got? Does the market end green this week? Full question. Does the market end green this week? There we go. I don't know. The market reacted pretty big to the data. You know, some people were like, "Oh, the market's not going to react." I mean, there's a pretty big reaction here. I mean, the reason we're flat over the last couple of days is not because of no reaction today. It's just because yesterday we pushed up so much. Like yesterday, if we put like a 5-minute chart up or a 15-minute chart up, we ripped up big yesterday. So again, you know, this is the last 2 days essentially right here where we've gone up really big and then we pulled back really big, and now we're essentially flat. You know, and so, you know, we could move back up, maybe, I don't know, but again, last couple of days we're essentially flat. Yeah, I'm not saying it is going to end green. I'm just asking people if we're judging sentiment. Always the opposite of the poll. Yeah. Okay. Well, usually, like, if it's about an individual stock, we got more bulls than bears. If it's about the actual market, we got more bears than bulls, I would say. All right, market's starting to rebound a little bit here. Should John get a 100K tattoo? You know, I get it right under this one right here. You know, just get like 100K. You know, I got my kids' initials right here. You know, I could just get 100K. You know, all the things that are important to me. Just get a 100K tat right there. Hey, I get like a neck one. I get a neck one, 100K. You know. Bob, get a T stamp. Hey, 100K on the back. You know, let everybody know it's important to me. Bitcoin at about 24.4K. We'll see if that moves up. I think it's good that Bitcoin's just up as it is. Teardrop style tattoo, 100K on the eye. Okay. Yeah, women will be lining up. Carol's got to watch out, man. You know. All right, market bouncing back a little bit. Google bouncing back some too. Triple T. This is going way back to the days where I bet the AMC community that if AMC broke 100, I'd get an AMC tattoo. That's how confident I was in it. I'm so happy it didn't, though. I would have been, you know, I'd still be tatted up with AMC. The way I looked at it at the time was that even if it does break 100K, it'd probably be pretty good publicity. You know, like think about how viral that would go if I got an AMC 100K or I got an AMC tattoo. You know, I could put that on Twitter, bro, and everybody would make fun of me. And publicity's publicity. You know, that's the way I was really looking at it at the time. My channel was much smaller back then. Definitely top 3 channels ever, but much smaller back then. And but yeah, luckily we never AMC you know, never did it. They already changed it, Marcus. So instead of looking back over the last 2 years, they only look back over the last year. No. For those asking if PPI's out, again, it might state the PPI data right underneath me. Like, key. You know? Right. It could be right underneath this area. It might be. It could be. Just a weatherman it real quick. You know? Like all around here. You know? The data might be all around here. All right, guys, we got about a minute and 20 seconds. Oh man, I'm sorry to hear that, Lid. Hey, good luck. You know. If you got a GoFundMe or something, send it to me in Discord. I'll plug it one day if you want me to. Lyft pushing back up here up to 1130s. So we got Ford up there at 1270s. SPY breaking down under lows still. Starting to reverse. Market's about to open up in about 30 seconds as well. Again, let me know what you guys think. Here's the open. All right, here's the open, guys. 10 seconds. All right, so there's the drop at the opening bell. Let's see if we pump back up here. Google's actually kind of all the way back up to 96s. So, hey, you'd love to see it. Let it ride back up here. Ford's still kind of breaking down, but that's all right. Problem with having so many monitors. And markets pump it up. Again, Google back up to 96s. SPY back up to that level here. I don't know if I trust it yet, but we're going to wait. Lyft about to go green on the day. I'm sure there's some puns there, but we're just going to let it go. SPY testing that previous level here. That looks good. A lot of stuff dipped and then rebounded here, and they're close to break even now. SPY up to almost 410s again. I think 410s is going to be a really interesting level, though. And for my Google trade, I think I'm going to go ahead and take a little piece of this off now. Yeah, I'm just going to go ahead and lock in. Let me see. How do I do this? There it is. I'm going to go ahead and lock in another 25 share position. All right, so we just took off there. Only got 50 shares left. A lot of chop at the opening bell here. Apple. Yeah, no worries, Lynn. Apple's starting to push up. So Apple kind of leading the market up right now. Again, we got 50 shares of Google left. We're going to let that ride up. No. D. No, I don't. I got my sources. Yeah, I'm just kind of patiently waiting here. I mean, the activity since the opening bell looks green. SPY still deeply below VWAP. Again, I'm waiting here. I don't really see much edge in this today. Market looks like it wants to push up higher, but inflation data was bad. Ford actually starting to rebound nicely, though. Apple bouncing at VWAP here, but pretty choppy neutral trend. Looks like taking that position off on Google was the right move. We took it off right at that top of 96s here, which again, solid move. Gonna sit back on the rest though. Watching Apple, Ford pushing up a little bit. What's Microsoft doing? Microsoft's starting to look weak. We might start shorting now. 2 contracts. Looking for a larger breakdown now. Only problem is Apple retracing a little bit here. We got 2 contracts. There's 3 now. I'm going to be patient on the rest. Again, Apple's kind of dragging the market up, but could retrace. Microsoft just rebounded fast too. Yeah, so Apple's at the top of the range. Microsoft's at the bottom, breaking lows, and then Apple just dipped down too. So I want to give this time to work still. I still think this could break. Looking for the upside down U-shaped breakdown. Slightly green in this position now. But again, I'm giving this time to really flush down. Google just broke lows. Yeah, there we go. Starting to flush. All right, so we just took most of that off. We got 1 contract left. Gonna let the breakdown continue. We'll just get out there and see what we get. So yeah, today we are up. You can kind of see what the trades are today. We are up about 585. Mostly trading the PPI report short because it was pretty weak data that showed up. Starting to get a little flush down here. Apple's the one thing kind of trying to drag the market up, it looks like. But it's a struggle, and Microsoft's still edging closer to lows. Could short this little pop. Is what I'm kind of looking at, maybe. Big rebound here. We're going to wait. Apple is what's dragging the market up. So Apple just broke highs. Choppy market so far. Let's see if we rejected that previous level here. Again, Apple's the strong looking one here, which is just weird for the market. Not the most sensical market right now, but, you know, all good. Google bouncing all the way back too. Ford bouncing back, Google bouncing back, SPY bouncing back. Again, we're in a pretty sideways neutral range at this point in time. So if you look at this, Apple, Ford still pushing up. Google still moving up too. Again, we're just kind of waiting here. We got a really neutral range. No real trades yet. We got the small range that we're kind of waiting for it to break through. I usually wouldn't mind buying this dip. Google looking strong, back up to 96s here. But in a choppy range. Yeah, well, Apple's the top listed stock in the S&P 500. That's why I watch Apple. We watch Apple, we watch Microsoft, we watch Google, we watch major stocks, right? Tesla's number like 6, I think. So we just watch major exchange listed stocks. Apple leading the market, which is why we kind of report on Apple first and talk about how Apple is dragging the market up. right, starting to turn and everything, so we are starting to turn in some stuff. Google looks strong. Apple hitting VWAP here, starting to bounce, it looks like. Ford ripping up, breaking highs. We might buy some stuff here, but again, we're trying to just sit back, let the action unfold. Ford testing highs. I'm also watching my swing trades pretty closely. Google back up to 96s. Yeah, I mean, so far we're still right around yesterday's open. So it's not like a super big red day yet. Now, maybe the market turns on us. That's possible. Google breaking highs, looking good. So, I mean, the market could turn. It might turn. Towards the top of the range now, though. Again, Apple's starting to turn down to 154s. But we're in such a neutral trend right now that it's hard to really make money in this trend. There's not really any super big edge, I would say. Right now, we're watching Apple to see if it holds at the volume weighted average price is what we're doing. Yeah, we've been in this range that we've drawn for a while now. We're just kind of sitting here. Google's looking good, though. Google's driving the market up. Apple holding at the volume-weighted average price. Starting to ramp back up, too. My Google trade is looking great. Let's let that one continue to pump. What's Lyft doing here? Lyft is looking good, too. All right, market's starting to push up, testing the top of the range here. Lyft is moving up. Apple moving up. SPY starting to test the top of the range. Still in that range, though. So, again, just kind of sitting quiet here. Google up to 96.50. Yeah, Microsoft's been testing lows, but even it's still pretty close to the VWAP here. And again, if you want to trade on one of these funded account programs like this, this is really useful. What Top Step does is really useful. They give you a demo. If you can hit the target on their demo while following their rules, then they fund you between 50 to 150K with a 90% split. Basically you prove profitability, you manage risk, and they fund you. Monthly price is For the base one, 165, but if you use my link, you get 20% off. They give you a 50K demo. You got to hit 3K in profit on that 50K without losing 2K total or $1,000 a day with 5 contracts max. Reasonable ratio. It's a 2 to 3 ratio. You got to make 3K without losing 2K on the base one. $140 a month roughly after tax. Pretty cheap. Again, what this really accomplishes is that it tests your skill without you risking a lot of money, right? It tests your skill without you risking a lot of money. And again, I'm not bragging, but I'm already funded on Thinkorswim. But for those that aren't funded like me, this is a beautiful way to test your skill, you know. And so we're off and on, and we have mixed results in these combines. But again, most people are not going to have it like that, and most people are going to have very big value in taking these because it's a lot cheaper to try this out than it is to put up the money yourself and risk thousands of dollars. And so if you want to check it out, here is the link. Again, you get 20% off. I'm certainly biased. They're a sponsor of mine, so I'm definitely biased in their favor. But yeah, check it out right there. Really, I'm watching my Google trade this morning. My Google trade is pumping up at 96.50s right now for Google. Hey, you'd love to see it. Tesla, what's Tesla doing? I haven't been watching Tesla. I've been watching Ford push up. Apple's kind of neutral though. Tesla is actually ripping up more than any of the other ones today. It looks similar to Apple, but a little bit stronger than Apple right now. Yeah, Tesla was one I was wild wrong on. I was skeptical of Tesla at like 120. Bitcoin at freaking 24.5K. It looks like we might get a bump up here, but we don't really have a trend right now. All right, so did the president post a positive quote or a positive statement regarding Elon Musk? So the president just posted, he said, quote, "In building our EV charging network, we have to ensure that as many chargers work for as many drivers as possible. To that end, Elon Musk will open a big part of Tesla's network up to all drivers. That's a big deal, and it'll make a big difference." End quote. The president. So honestly, that's the first positive thing I've seen him say about Elon this far, but I think it's good that they start to be friendly here. I think if Tesla wants stability, they need to stop being so political because they're ostracizing a large percentage of their shareholders and drivers away from purchasing Teslas, and so in that regard, I think it's good that they make amends and that they get along, and it's definitely good for Tesla overall. But yeah, there's the pump up in markets. I should have bought the dip, but again, we'll wait. Yeah, PPI data is right underneath me right here. Google just broke highs again, tapped 196.50 here. We're holding 50 shares. We're just going to sit on this 50 shares position, though. We're green on Lyft. We're green on Google. We're slightly down on Ford. Tesla just broke highs again, still pushing up. Google moving over towards highs as well. We're going to let it roll. I mean, I think it means more than nothing. I get it. You might disagree with political people or whatever it is. I'm not one of those people who root for I'm not one of those people who roots for my political party, which I don't really have one. I'm pretty middle ground neutral, but I'm not one of those people who roots for them like they're my football team and just kind of treats them like they're my football team. I'm not really like that. Like, I'm pretty neutral in that regard. And I think for Tesla's strength, it's good that they make amends, because I don't think bickering about politics is good for Tesla overall. Again, it's very polarizing, and I think it's good that they get their differences worked out and they agree on stuff. Tesla ripping up. With that said, Tesla up to almost 215s. Google just broke highs as well, up to 96.70. Tapping 96.70. SPY still struggling here. I'm trying to see what's dropping the market. It's not Tesla. It's not Microsoft. It's not Apple either. Market's around the top of the range, but what proof do you have that opinions are driving away buyers? I don't really have any proof. It's not about that. It's just a speculation. Like, I think that at the very best, taking super one-sided stances politically is going to push away, at very best, 30% of your people. 30% of your buyers, 30% of your stockholders, 30% of your people who might potentially buy Tesla or support Tesla. I think at very best, taking super one-sided political stances is going to push away those people for sure. I don't think that's really an arguable thing. I think it's obvious. It's one of the reasons like main public figures choose to stay neutral, because that's what they should be doing. Because regardless of your political affiliation, it shouldn't matter that much to where, like, you know what I mean? Like, it should be neutral. And I think that's the same thing with Elon. I think it should be neutral. Well, Disney's different. Tesla is just sprouting up over the last 10 years. Disney's been around for a century plus. Has already established multiple really big, parks. And Disney's able to do that because they're stable. Tesla's 10 years old. There's a difference. Okay, so basically what you're saying, Derry, is that you're on the right and you don't like the fact that I'm saying this, and that's okay. Like, it's all good, man. But again, I don't think it's really arguable. I think it's obvious. I think it's a self-evident thing, the proof is, look at the split of political affiliations in the country, but it's not worth arguing about. It's all good. Again, I'm pretty neutral politically. I don't really like or dislike either side. I don't really get into the whole politics thing. Too many people base their whole life around one political affiliation, and I just think that's silly on both sides. I think both sides are equally toxic in their own ways, and I'd rather just stay away from the whole realm of politics as a whole. Tesla's technically green on the day. Despite the big drops, Tesla is actually technically green on the day. It's over the previous closing price. Google breaking highs again, up to almost 97s. Hey, what's up, Justin? Thank you, brother. I appreciate you, man. Yeah, it's not worth it. I just stray away from it. I'm not going to lose sleep over anything like that, I'm a capitalist, but I'm also socially liberal, and so I'm pretty neutral. I'm not really a libertarian either. I disagree with them in some ways too, so I'm pretty neutral. Tesla's starting to move up. Ford's starting to move up. Apple's starting to bounce. SPY has been in a pretty sideways trend all morning. Ford needs to break. Ford's been pushing up. It's at 1280s. We'll see if it holds. Yeah, it's kind of high. I mean, I'm obviously a capitalist, but all right, so we're just sitting here. Google rebounding really nicely all morning. Just kind of sitting back, let it work. Ford tapping over the opening bell high. Tesla battling the previous closing price. Apple's very choppy too. Again, I'm kind of it's boring. FDR kind of guy, breaking up monopolies. All right, getting some pullbacks now. Again, market is so sideways, so. Oh, was that Teddy? Yeah, sorry, that was Teddy Roosevelt. I get my Roosevelts mixed up. All right, guys, so Google finally pulling back. All right, decent little pullback here on some stuff. Market's very choppy and neutral. The question is, does Tesla bounce at the VWAP here? Music top one, bro. I had so many people complaining about the music earlier. No, that wasn't being a smart, that was just correcting. Yeah, FDR was Theodore's uncle, I think, right? And it was Theodore. It was Teddy who broke up the Rockefeller monopolies. And I can kind of agree with his decision, but yeah, a lot of stuff's heading south. I'm not in Snap anymore. I got out of Snap a while ago. Again, I don't know where I'd buy Snap again. I'd probably buy it at like 9s, maybe, depending on what we get. But I don't think anything's low enough for me to really want to buy stuff up either here too. Like I just don't think anything's necessarily cheap enough for me to start buying up. Do we have any other data come out today? Let me see. No. We got one of the Mester is speaking today, FOMC member Mester. All right, so Google at VWAP, Tesla at VWAP, Apple slightly below VWAP. What else? Microsoft is very sideways. We just don't have any trend here, team. There's no real trend right now. The range has been pretty sideways. I don't see much of an edge either in this. Price forecast, no. Too much confirmation bias in that. Yeah, Ford's looking good. Ford's up to 1280s. Still red in it, but pretty close to. I mean, we're 10 cents away from being green on it, so. Yeah. I mean, a lot of stuff's trying to go green on the day, but the market's still kind of sideways, man. Again, we're watching Google here. Google bounced all the way back up, though. It looks good. So, like, look at Google right here. Hold on, let me get rid of this. Google bounced right at the VWAP here. We'll see if that drags the rest of the market up, but... Here's Google. Right at the volume weighted average price. Pull it back to it. This is why I like the regular VWAP more, is because the regular VWAP seems to just be more accurate. But I'm probably going to close it down today. I just don't see anything. Like, the market's been super neutral. If you want to check out Top Step, like I said, we've been mostly trading on Top Step. Look at Google bouncing back here. So, like, look. Google all the way back up to 96.30s. You'd love to see it. Ford about to go green on the day on Ford as well. Yeah, for sure. I mean, I'm kind of a buy the dip trader on that stuff. Like, that's what I've made most of my money in right now. Again, if you look at Google here, again, our average is 93.80s. We're up about 135 on the last 50 shares. And again, we had over 100 shares on this one. So I bought the dip on Google. Market is completely sideways and neutral. So we'll see what we get. But again, I'm just going to sit in the rest on Google and let it work. Again, if you want to check out... If you want to check out Top Step's a funded program for futures where they give you a demo, and if you can hit the target on their demo while following their rules, they fund you between 50 to 150K. If you want to check out the link, here it is. Great way to help support your boy here and support this channel. So yeah, check it out. Great way to help support your boy here and support this channel. You can get 20% off. Also, check out Chart Prime. Chart Prime is a great way to help support the channel here. They are a trading view indicator service where they automatically document support or resistance There's a bunch of different stuff they do here. What do you mean by BPD, dude? The only BPD thing I know is borderline personality disorder. And I certainly don't have that, you know. I know some people who do, though. It's a rough thing, man. But if you want to check out Chart Prime, borderline people are scary, bro. They're super intense, you know. But again, if you want to check out Chart Prime, here's yesterday on Chart Prime. Look at how accurate this is. And when you add candlestick momentum, it can be even more accurate. So they automatically document support and resistance. I can't guarantee you're going to make money. I can't guarantee it's going to work for you. They're a sponsor of mine. They pay me money, so I'm definitely biased in their favor. Google, rip it up. It's at almost 97s right now. But look, reversal up, bounce, reversal down, drop, reversal down, drop, reversal down, drop, reversal down, drop. And again, we keep going. But you can use it in stocks, crypto, forex, futures. Check out the link in the description. Google just broke highs. BPD, yeah, BPD. I've studied it before. It's really a with BPD. It's like you don't have empathy. It's similar to narcissism. The way you can tell is because it's like empathy. It's kind of like empathy is incredibly important. And some people with BPD just don't have empathy. Long-term feelings of emptiness and loneliness. That's definitely not me. Honestly, I told Carol, I don't know if I've ever been depressed in my life. You know, like I've been sad at specific moments, but I don't know if I've ever been depressed in my life. You know, like actually, like genuinely depressed, where I was like actually like long-term sad. Like I think I've been sad before, but I think you're gonna be sad sometimes. You know, it usually is influenced by life events that happen. You know, but yeah, I'm generally a pretty happy guy. I think you guys can probably tell. You know, when you look this good, I mean, it's hard not to be happy. But you know what I mean? Listen. No, maybe I got it mixed up with sociopathic. I don't know. Fear of abandonment. I don't really have that. Unstable relationships. I've been married for 12 years. Impulsive. I like to be on time for things. Self-harm. Never done it in my life. Explosive anger. No, not really. I'm a pretty calm guy. Depression. No, not really. Pretty happy dude. I'm kind of the opposite of that, whatever that means. Look, I'm sorry, guys. I don't know. Listen, I really don't know. Like I said, maybe I was, again, I could be very wrong about my description of it. Like I said, I've never actually studied it, so I'm just kind of saying stuff. So I'm sorry if I'm wrong, guys. I'm sorry if I'm wrong. I was reading Google's description of it, okay? Don't get mad at me. Forward breaking highs. Microsoft testing highs, too. Ford about to hit break-even level in Ford. Tesla just tested 215s here. Google testing highs of the day as well. I don't have a position on the SPY. I'm holding Google, though, and I'm watching Google rip up. They feel the feel's too strong, so it's an oversensitivity to emotion. Yeah, sociopaths are the scary ones. Like empathy. I try to make sure my son has empathy, and he does. Like my daughter does too. You know. But empathy's the big one. If you have empathy, you're doing okay. You know. If you don't have empathy for people, then you know, it's not great. I used to have way more empathy, but it's been chewed up slowly but surely over the years. Sometimes it happens, as long as you had it before. No, I'm just having fun talking to everybody. I'm not depressed watching this channel. That's because we're the greatest channel of all time ever, you know? How do you know you have empathy for people? I don't know. I have empathy for people. I generally feel bad for people enough to where I've given them a little bit too much over my life. You know, basically, I'm just too generous, you know? I give them too much time. Like even the trolls here, the people who are obviously like critical of the channel, like when they apologize and they say, "Hey, I'm sorry," I usually before I would just kind of let them back on, and allow them to come back, and then eventually they do it again, and the cycle repeats. And so maybe that's not empathy, but I don't know. Yeah, those are the scary ones, Achilles. Like sociopathic ones are the scary ones. Yeah, definitely top 3. BPD is literally living on the edge. Everything is intense and borderline over the top. Every emotion and also action and reaction, general behavior and coping mechanisms. I know some people like that for sure. But again, the sociopathic one is the scary one, I think. Oh, I'm just talking here, Smiley. We don't ever say anything except for this. We just talk the whole time. We don't ever say anything of relevance or importance. I don't even know what the stock market is, bro. What's the stock market? What's a stock? Nah, man. We're at the end of the stream. And somebody, the chat was correcting me because apparently I didn't understand what BPD is, borderline personality disorder. Even though I Googled it and just kind of regurgitated what I read on Google. But the chat is correcting my obviously wrong assumptions about stuff. And that's okay. It's all love here. I mean, I hate you all forever, but it's all love. I'll see you guys tomorrow. We'll be back tomorrow. Tomorrow, I don't think we have any big economic data dropping tomorrow. Let me make sure. I don't think we have any big echo data dropping. I could see. I know what I do have is ADD, because I was supposed to end the stream like 15 minutes ago, and instead we got into a full-blown conversation about BPD. So yesterday we had retail sales. Today we had a lot of stuff. Tomorrow, I don't think we have anything tomorrow. Tomorrow we have some type of inflationary gauge for Canada. I'm not sure what the IPPI is, but some type of inflationary gauge for Canada. Nothing else really big tomorrow. And then looking at earnings, we might have some earnings tomorrow as well. DraftKings earnings are this evening. Tomorrow we got John Deere, Air Canada, AMC Network, Centerpoint Energy, and that's it. Stonk? Got you, bro. It's stonk. Okay. I knew it, man. I knew it. Did you buy Shopify? I don't trust Shop, dude. I don't trust Shopify. It's mostly drop shippers on Shopify. Amazon is used the wide majority of the time, and it's mostly drop shippers on Shop. To be honest, it's mostly drop shippers. And drop shipping's cool and all, but I think more money is made selling courses on how to drop ship than they do from actually drop shipping. And I don't trust a business like that. Like, again, I don't know how long something like that's going to be around. Again, to be fair, I really don't know. Like, I'm not super familiar with Shopify and their business and how strong or weak the company is. And so because of that, I just stray away from it. Like, I know Snapchat, I know Disney, I know Google, I know Ford, I know all that stuff. So the ones I buy, I try to know really well. And to be fair, like I said, don't really know Shopify super well. Anyways, later, team. Good luck. I'll come back tomorrow an expert on BPD. Later, guys.